2. 1, 2, 3, 4, 5, 6. Sound check. 1, 2, 3, 4, 5.
Yep. I'm testing the mic now. Testing 1, 2, 3. Mic check 1, 2, 3. Microphone check 1, 2, 3. Microphone sound check 1, 2, 3. Testing 1, 2, 3. Ladies and gentlemen, thank you for coming here today. Testing 1, 1, 2.
if this was like this. Good morning, everyone. If I could ask you all to please make your way to your preferred seats, grab a cup of coffee. Please be reminded just to perhaps put off the ringers on your phones and your devices. And please don't be bashful. Come to the front and occupy the tables up front so that those who are arriving a little later can probably sit further to the back. A very warm welcome to all of you. My name is Manjeev Dodanwala. I am part of the setup here along with the CSC and SEC, and we are delighted to host you at the Invest Sri Lanka 2025 Investor Forum in Singapore. It's a significant initiative that brings together policymakers, capital market stakeholders, fund managers, financial experts, and international investors, all with the shared goal of exploring the immense potential of Sri Lanka's capital markets. Sri Lanka stands at a pivotal moment in its economic journey, with renewed stability, growing investor confidence, and a clear policy direction aimed at fostering a resilient, dynamic market. Today's forum provides the perfect platform for collaboration, dialogue, meaningful engagement to drive Sri Lanka's capital market forward. We're excited to have you join us today for what promises to be a full day of insightful discussions and valuable exchanges. Let us now view the Invest Sri Lanka video presentation.
Sri Lanka, a gem nestled in the Indian Ocean, radiates unparalleled beauty through its lush landscapes, golden beaches, and mist-covered mountains. The island's diversity is reflected not only in its natural wonders, but also in its vibrant cultures. Today, Sri Lanka is a testament to resilience. With a population of over 23 million, the country has emerged stronger through collaboration and innovation. Now it is rapidly advancing, transforming into a thriving hub of economic growth and infrastructure development, buzzing with energy and promise for the future. Tourism, tea export, apparel, and agriculture remain key pillars of Sri Lanka's economy. With a rapidly growing educated workforce, these sectors have surged, driving substantial growth and supporting local livelihoods. Together, they fuel the nation's development, positioning Sri Lanka as a rising economic force in the region. True to its global reputation, Sri Lanka was ranked among the top 10 best travel destinations of 2025 by the BBC. Beyond tourism, Sri Lanka's export capacity is thriving. With 13 export processing zones and 2 deep-sea ports, the nation is streamlining production and expanding market access, attracting international investments that accelerate economic growth. At the heart of Colombo, Port City is redefining the nation's financial and commercial landscape. Designed as a regional business hub, it integrates world-class infrastructure with investment-friendly policies, making Sri Lanka a prime destination for global enterprises in finance, real estate, and tourism. Sri Lanka's economic resurgence has gained global attention, driven by bold policy reforms and large-scale transformative development projects. The completion of Sri Lanka's international bond restructuring has significantly improved the sovereign credit rating, reducing default risk and instilling confidence in new issuances. Alongside these financial advancements, the nation is steadily moving towards greater stability in governance and policy making, fostering a more predictable and business-friendly environment. This renewed confidence has sparked a wave of both foreign and domestic investments, reinforcing Sri Lanka's position as an emerging financial investment. A strategic shift towards an export-driven growth model is fostering competitiveness, sustainability, and long-term resilience. Key investments are propelling Sri Lanka toward an economic renaissance with a projected 3.5% GDP growth in 2025. At the heart of this transformation, Sri Lanka's capital markets are surging ahead, with the Colombo Stock Exchange emerging as a critical driver of economic evolution. The stock market's momentum has been nothing short of remarkable in 2024. All-share price index marked a 49.7% year-on-year growth, making it the second highest growth market in the South Asian region. Meanwhile, the S&P SL20 soared by an extraordinary 58.5%, reflecting an unprecedented surge in investor confidence. With a market PE ratio of 9.13 in 2025, Sri Lanka's stock market is notably undervalued compared to its regional peers. This offers an attractive opportunity for investors looking to capitalize on potential growth and value. It is a market poised for significant expansion, presenting a unique window of opportunity. Sri Lanka is not just adapting to global trends, it is setting them. As the island strengthens its infrastructure and cultivates a pro-business ecosystem, it has become an undeniable magnet for international trade and investment. With a bold economic vision underpinned by fiscal discipline, transparency, and sustainable progress, Sri Lanka is forging ahead as a rising force in the global economy. The nation's share of global trade may currently stand at 0.1%, but its trajectory is unmistakable. And so is its expansion, innovation, and leadership. The momentum is unstoppable. The opportunities are limitless. This is the moment to invest in Sri Lanka's future. The time to invest in the Colombo Stock Exchange is now.
I think that definitely deserves a round of applause. To officially commence today's proceedings, it is my privilege to invite His Excellency Senarath Dissanayake, High Commissioner of Sri Lanka to Singapore, to deliver the welcome address.
Honorable Professor Anil Jayantha Fernando, Minister of Labour and Deputy Minister of Economic Development. Honorable Dr. P. Nandanal Veerasinghe, Governor of the Central Bank of Sri Lanka. Senior Professor D.B.P.H. Disa Bandara, Chairman of the Securities and Exchange Commission of Sri Lanka. Mr. Rajiv Bandaranayake, Chief Executive Officer, Colombo Stock Exchange. Distinguished guests, ladies and gentlemen, good morning. It is my great pleasure to warmly welcome you all to the Invest Sri Lanka Investor Forum 2025 here in Singapore, organized by the Securities and Exchange Commission of Sri Lanka and the Colombo Stock Exchange. On behalf of the High Commission of Sri Lanka, I wish to express our sincere appreciation to all of you for your presence this morning and for your interest in exploring Sri Lanka's emerging investment and economic landscape. This forum comes at a time when Sri Lanka is making progress recording a real GDP growth rate of 5% in 2024 in its economic recovery, underpinned by a strong reform agenda and a renewed commitment to macroeconomic stability, investment facilitation, and international engagement. Today's event brings together senior government officials, leading private sector representatives, and potential investors in a shared space for engagement. It is our hope that this forum will not only serve to highlight key developments in Sri Lanka's capital markets, but also inspire new partnerships between Sri Lankan and Singaporean business communities. Singapore has long been a valued partner for Sri Lanka as a source of investment and innovation. We believe that Sri Lanka's evolving policy framework and its strategic location at the crossroads of South Asia and Southeast Asia offer compelling opportunities for collaboration in areas ranging from infrastructure and services to manufacturing, logistics, and the digital economy. I encourage you to take full advantage of the program today to explore areas of synergy and long-term potential. Before I conclude, I would like to thank the Securities and Exchange Commission of Sri Lanka and the Colombo Stock Exchange for organizing this event to connect with the international investor community here in Singapore. I would also like to acknowledge the contribution of all the supporting partners, including Singapore-Sri Lanka Business Association, Singapore Indian Chamber of Commerce, ICC Sri Lanka, CFA Society Sri Lanka, Sri Lankan Airlines, and individuals who contributed to making this forum possible. I wish you all a productive and inspiring day of constructive dialogue, networking, and opportunity building. Thank you very much.
Thank you, Your Excellency. To share opening remarks on behalf of the Colombo Stock Exchange and to set the tone for the day, I now invite the Director of the Colombo Stock Exchange, Mr. Ray Abewardena, to the stage.
Honorable Professor Dr. Anil J. Fernando, Minister for Tourism, Minister for Labour and Deputy Minister of Economic Development, Dr. Nandalal Veerasinghe, Governor Central Bank of Sri Lanka, His Excellency Senrat Dissanayake, Sri Lanka's High Commissioner to Singapore, Senior Professor Harendra Disa Bandara, Chairman of the Securities and Exchange Commission of Sri Lanka, ladies and gentlemen, it is indeed an honor to address this gathering this morning at the Singapore Investor Forum, and it's a privilege to be here on behalf of the Colombo Stock Exchange at a time of renewed progress and opportunities. Over the past year, we have seen a steady recovery in the economy, led by strong growth in key sectors such as tourism and construction, backed by disciplined fiscal management and a stable monetary policy framework. Alongside the recovery of the economy, we have achieved political stability through a clear electoral mandate, enabling the government to drive forward key reforms and long-term policy consistency. Our capital markets, too, are evolving with strong performance, growing investor participation, and major structural upgrades like the launch of the Central counterparty platform week before last. Sri Lanka is entering a new era, one where stability meets opportunity and where we welcome global investors to be part of a compelling growth story in South Asia. Sri Lanka's macroeconomic progress is a story of resilience, reform, and renewed confidence that sets the foundation for the opportunities we are here to discuss today. In 2024, our economy grew by an impressive 5%, exceeding global expectations through robust performance in construction and tourism, accentuated by growth driven by disciplined fiscal management, progressive structural reforms, and stable monetary policy. A key highlight of our recent achievement is the stability of the Sri Lankan rupee. Over the past year, the exchange rate has remained stable, supported by prudent policy initiatives, improved external sector performance, and a steady influx of foreign investments and tourism receipts. The exchange rate stability enhances investor confidence and provides predictability for businesses operating in Sri Lanka. Our commitment to macroeconomic stability is further evidenced by ongoing fiscal consolidation, a positive regulatory environment, and strengthened governance. Despite global uncertainties, Sri Lanka remains a competitive destination for investors, leveraging in strategic location, skilled workforce, and a modernizing capital market infrastructure. As we look ahead, we are focused on maintaining stability, expanding export potential, and unlocking new opportunities in digital finance, green investments, and innovation-driven industries. We would like to invite you to explore the opportunities firsthand. Sri Lanka's capital markets offer both a strong foundation and exciting frontier for foreign investors seeking growth in South Asia. Last year's presidential and parliamentary elections resulted in a clear mandate and a strong majority for the ruling party. This political stable environment has allowed for more predictable and consistent policymaking. The administration has demonstrated its commitment to pursuing economic reforms, particularly those in line with IMF recommendations, which supports investor confidence and sustains economic recovery. The new government has maintained macroeconomic consistency, helping Sri Lanka surpass recent growth expectations. While challenges do remain, the absence of major unrest, violence, or political upheavals in recent months underscores the relatively stable political environment we are in now. The establishment of a strong political stability following the elections in late 2024 has also played a significant role in restoring public trust and bringing much needed policy clarity and predictability, key drivers of investor sentiment and long-term market growth. We all know that markets perform and markets react well to stability, and Sri Lanka is no exception. The all share price index, which was at 13,000 in late 2024, is today at 19,900. The S&P Top 20, which covers the top 20 companies in Sri Lanka, which was at 3,900 points, is today at 5,800 points. Market capitalization, which was at 16.4 billion late last year, is today at 23.4 billion. The ASPI is the second best performing index in the region, second only to South Korea, I believe. At 11.7 times multiples, our market is very attractively priced. Sri Lanka stands out as one of the most attractively valued and inexpensive markets in Asia, especially when compared to other regional markets, whereby offering a meaningful entry point for value-seeking investors. Recent reforms and modernization efforts at the CSC have enhanced market transparency, regulatory standards, and technological infrastructure, increasing its appeal and competitiveness to foreign institutional investors. The Colombo Stock Exchange has also expanded its range of tradable products to cater to a more diverse investor base, support finance, sustainable financing initiatives. Recent initiations include green and blue bonds, sukuks, high-yield bonds, perpetual and infrastructure bonds, reflecting a deepening of the market and growing sophistication in product offerings. The CSC also marked a historic milestone in Sri Lanka's capital markets with the launch of the CCP week before last. This is a transformative development that significantly enhances the safety, efficiency, and global competitiveness of the domestic capital market. It is designed in accordance with global standards, such as ISO principles for financial market infrastructure, boosting Sri Lanka's credibility and attractiveness globally. This streamlines settlements through netting of trades, reducing transaction volumes and operational costs. As we look ahead, Sri Lanka is just not a story of recovery, it's a story of transformation. With a stable macroeconomic environment, a committed reforms agenda, and a capital market that is gaining regional traction, we believe this is a moment of alignment between policy, performance, and potential. Whether through financial instruments, infrastructure projects, digital finance, or capital market participation, Sri Lanka offers investors a strategic gateway into a market defined by resilience, reform, and growing global relevance. We invite you all to be a part of this journey, to invest in a future that is grounded in stability, driven by innovation, and shared by ambition. Thank you for your presence with us this morning, and we do look forward to forging lasting relationships and partnerships in the months and years ahead. I wish you all a great day. Thank you.
Thank you, Mr. Abeyawardena. I think after that, sharing clearly a lot of keywords, and Sri Lanka is at an inflection point, but it's on a path of transformation, it's on a journey of recovery, and all of the essential building blocks are in place. So in fact, after that rather rousing account of the evolution in the past 24 months in Sri Lanka, I would be very surprised if you're not already salivating at either deepening your investments in Sri Lanka or really taking note of going into the market very, very soon. Now, a robust regulatory environment plays a key role in ensuring market stability and sector and investor protection. To speak on behalf of the Securities and Exchange Commission of Sri Lanka, or SEC for short, I now invite its chairman, Senior Professor D.B. P.H. Disabandara, onto the stage, please.
Very good morning, ladies and gentlemen, and a warm welcome again. Honorable Professor Anil Jayanta Fernando, Minister of Labour and the Deputy Minister of Finance and Economic Development, and Governor of Central Bank, Dr. Nandalal Veerasinghe, His Excellency Senrat Disanayake, High Commissioner of Sri Lanka to Singapore, Mr. Tushar Jayaratne, Deputy Director General SEC, Mr. Rajiv Bandaranaike, CEO CSC, Ms. Vindhya Jayasekara, CEO Designate, CSE, Mr. Niroshan Vijay Sundara, and the CSE team, and board members of CSE, including Mr. Ray Abeyewardena, ladies and gentlemen. I think Mr. Ray Abeyewardena and our High Commissioner mentioned very interesting story about Sri Lanka, and let me mainly talk about the regulation aspect, which will lay the foundation of your decision making. When the regulatory environment is sound enough, then you will think about Sri Lanka in a better way. So as we gather here today, we stand at a significant moment in our nation's financial journey. So over the past year, as Mr. Ray Abeyewardena mentioned, our capital market has demonstrated extraordinary resilience and strength, and it shows the capacity and the potential. The all-share price index has delivered exceptional returns of 49.750% of the last year, and with robust growth continuing into this year, it's at 25%. So this performance has underpinned by stronger investor confidence, evidenced by positive net inflows of USD 66.58 million. Most notably, capital raising reached to USD 568.61 million. So one of the highest amounts raised in a single year. So these achievements reflect not merely numbers on a screen, but the renewed confidence of investors who recognize Sri Lanka's potential for sustainable growth. So ladies and gentlemen, as the Securities and Exchange Commission of Sri Lanka, we are committed to fostering a transparent, efficient and inclusive capital market ecosystem that serves as a cornerstone of our nation's economic recovery and long-term prosperity. So today's forum represents more than an investment opportunity in Sri Lanka. It embodies our collective commitments to build a resilient financial infrastructure that attract global capital while serving the aspirations of our nation. As you're aware, SEC Sri Lanka has been entrusted with 3 critical mandates as the market regulator. So protecting investors' interest, promoting market development, and maintaining effective market oversight. So ladies and gentlemen, over the years, Sri Lanka's securities market has played a very vital role in channeling domestic savings into productive investments, thereby fostering capital formation and driving economic growth. In today's context, competitive global environment, investor confidence hinges on establishing and maintaining institutional trust through robust regulatory oversight, transparent governance structures, and demonstrated ability to swiftly address market irregularities while protecting investor interest. So I'm pleased to share that SEC now operates under a significantly strengthened regulatory framework enabled by the enactment of the new Securities and Exchange Commission Act in 2021. So this landmark legislation has fundamentally transformed how we uphold the integrity of Sri Lanka's capital market. So importantly, our approach brings greater clarity, consistency, and predictability to market operations. Our zero-tolerance stance of market misconduct is enforced swiftly and decisively through a comprehensive mix regulatory interventions and enforcement actions. So in parallel, we recognize that technology serves as a powerful catalyst in strengthening our surveillance capabilities, capacities, and enhancing how effectively we supervise the markets. So we firmly believe that building a modern capital market requires three fundamental pillars, that's innovation, transparency, and responsible use of technology. So with this vision in mind, we have implemented a cutting-edge cloud-based supervisory technology system that uses artificial intelligence and advanced data analytics to dramatically improve our efficiency and help detect risk before they escalate. So to take our market surveillance even further and further, we have forged a strategic partnership with NASDAQ to deploy their state-of-the-art surveillance system. So this initiative positions us among most technologically advanced regulatory bodies in our region. So furthermore, as part of our ongoing effort to modernize our capital market and it's aligned with the global trends, the SEC has prioritized innovation and product diversification to meet the evolving needs of our economy. So in this direction, our recent initiatives include increasing comprehensive regulatory framework for green bonds, as Mr. Abeyawardena mentioned, blue bonds, social bonds, and sustainability-linked bonds. So this makes a significant milestone in Sri Lanka's advancement towards sustainable investment and position our capital market at the forefront of responsible finance. So in addition, we have also broadened our market offerings with the introduction of instruments such as perpetual bonds, infrastructure bonds, high-yield bonds, sukuks, stock borrowing and lending, and regulated short selling. So these products and especially they are designed not only to diversify investment opportunities, but also to facilitate long-term capital formation, particularly in financing Sri Lanka's critical infrastructure projects and their development. So ladies and gentlemen, I want to emphasize that protecting investor interest remaining our highest priority, achieved through our comprehensive disclosure-based regulatory framework. We require listed companies to provide timely, accurate, and relevant, complete disclosures of all material information, ensuring that every investor has access to the transparency they deserve when making investment decisions. So through our continuous disclosure requirements, price-sensitive information reaches the market immediately, eliminating information gaps and preventing unfair insider advantage. So this commitment to transparency creates a level playing field where all investors, large or individual retail, so can participate with confidence in our market in time to come. So a significant milestone is strengthening investor confidence in our market. Our recent licensing of CSC Clear Private Limited, a fully owned subsidiary of Colombo Stock Exchange, to act as the central depository, central counterparty for all equity transactions. So this CCP serves as the centralized risk buffer, dramatically reducing the likelihood that a single counterparty default could trigger broader financial contagion across our markets. So by adopting global standards for trade clearing, margining, and risk management, we have harmonized our market infrastructure with international best practices. So this gives investors, particularly institutional and foreign investors, the assurance that their transactions are backed by world-class risk mitigation mechanisms, even in volatile market conditions. The successful transition to a T+2 settlement cycle marks yet another pivotal milestone for Sri Lanka's capital market. This smooth and timely implementation not only aligns at our international best practices, but also reflect the strength and the resilience of our market infrastructure made possible through the collective efforts and unwavering commitment of all stakeholders. So as Sri Lanka charts its path towards economic resurgence, the Securities and Exchange Commission remains resolute in supporting the government's vision of building the nation that finances its growth through equity and innovation. So in pursuit of this goal, we have crafted a comprehensive homegrown roadmap with clearly defined short-term, medium-term, and long-term strategies. Having successfully delivered on our short-term objectives, now we are advancing into a medium-term phase of our next journey. So among our key priorities are the development of vibrant corporate debt market, the digital transformation of capital market infrastructure, and the establishment of multi-asset class derivative exchange. So these initiatives are designed to deepen market liquidity, strengthen risk management capabilities, and to bolster investor confidence, ultimately positioning Sri Lanka as a competitive and resilient investment destination. So, ladies and gentlemen, in conclusion, Sri Lanka's economic revival offers a compelling opportunity to strengthen and modernize our capital market, anchored in innovation, transparency, and modernize our capital market anchored in innovation. So ultimately, we are moving towards ensuring transparency and inclusivity. Your trust and continued engagement will be vital in shaping a more resilient and globally competitive securities market. So together, let us unlock the full potential of Sri Lanka's capital market and contribute meaningfully to the nation's long-term sustainable growth. So I hope today's discussion and the deliberations will be very helpful in making decisions and to brush up your mindset to invest continuously and greatly in Sri Lankan capital markets. Thank you very much.
Thank you, Senior Professor Desabandara. That was quite an uplifting message. There was a lot of content in there, but clearly what resonates, at least in my mind, is the fact that the adoption of technology, as well as best-in-breed types of products and services, and the services around the introduction of those products, and also the appropriate guardrails have been essentially put in place to sustain and to inspire investor confidence. So I think you should all take that to heart. Clear and progressive policy direction is essential for capital market development. It is now my privilege to invite the Minister of Labour and Deputy Minister of Economic Development, the Honorable Professor Anil J. Fernando, to deliver his address on the government policy outlook.
Thank you. Good morning to everyone. Dr. Nandalal Veerasinghe, Governor of Central Bank, and Senator Dissanayake, Excellency, the High Commissioner to Singapore, and Professor Disa Bandara, Chairman of the Securities Exchange, and Mr. Rajiv Bandaranaike, CEO of Colombo Stock Exchange, Vindhya Jayasekara, CEO designate, and all distinguished invitees. It's my great pleasure to be here in Singapore, we call City of State, to host this important investor forum called Invest Sri Lanka, with the opportunity of connecting to the most influential, the global investors and business leaders. A very big thank for the organizers, joint organizers, Colombo Stock Exchange, the High Commission, and Securities Exchange Commission with the other partners. I am assigned to talk about the government policy outlook. I'm pretty sure that all of you here have heard about policies. Even without hearing policies from a minister or a politician, you can find the best policies. You can Google and get the best policies. You know what they are. What matters is not the content or the outlook of the policies. What matters is whether these policies can be implemented, and implemented for whom, for the benefits of the public interest, and in what context. So that is most important. Let me just say a few words about our government. Of course, this is a new government. I have become a minister or politician first time. I have been an academic, a professor. I just saw one of my students here, so one of the groups here, Supun. And likewise, many are there. Sorry, just mentioning his name only. It's a bit challenging task, but what I realized during this particular short period of time, if you are determined to do a right thing, of course there are lots of avenues and ways of doing things. We need to be very focused. And again, before forming our government was institutionalized in the society, maybe in the world as well, maybe among your thoughts and your analysis as well. Our government was really labeled and institutionalized as a demon. When we come to power, we would really destruct everything. We would confiscate the private property. Yes, that is the situation. We would unleash the violence, and it would be really a chaotic situation. But we form a government, to be honest, to transform this particular society, Sri Lankan society, that has been really battered by the decade-long wars and the racism and so many things against the humanity. we really wanted to transform this particular society to a place where everyone can live in harmony, with the theme of a thriving nation and a beautiful life. One of the key things to do that is, we believe, is the use of our political power for the best interest of the public, because we are agents of the public. We know that in governance, there is a risk when agents, especially the political agents, come into power. There will be a trade-off, whether that power will be used for the private interest or the public interest. The politics, the gamut of politics is how best to trade off between private interest and public interest. That's the game. So we ensure, not only on behalf of me, on behalf of my government, including His Excellency the President, we are bestowed to uphold the public interest, and we will never ever use this mandate to serve the private interest. So that's a key. It is for you, may not like, you just hear it, but it is our responsibility to demonstrate it by our actions. So this is where the policy matters, I suppose. So I'm not going to talk about many policies, just the basic policies just pertaining to the investments. I will talk. When it comes to investment, like the country's situation, in a way we have lost a decade. We have lost a decade. Compared to the world, and referring to the competencies, the capabilities, even the limited resources that we have, we could have gone more far than that. Even before the crisis, we believe that. But unfortunately, when compared to the world, in terms of technological developments or human capacity development, in many terms, we were far behind. So how best we really elevate the present situation to the level that we expect? Among the other things, investment is a key. Without investment, we can't take this leap forward jump. Otherwise, so we can just manage the status quo as it is with the slight the development. We need to have an exponential growth. But with the given context, it is not that possible, because we are working with a given fiscal constraints, because we happen to be with a given medium term, the framework with the IMF as well. Of course, until we reach that particular level, in a way it is good, we need to maintain this particular discipline. So whereas the policy, the fiscal policies, fiscal prudence, fiscal discipline really plays a key role. During a short period of time, we have been able to show our discipline, and we are consolidating all these fiscal related things, the policy matters, whereby ensuring that the tax base, the revenue base is increased in a fair manner, and with the digitalization, the support of digitalization, and the revenue is spent on prioritized basis. As a result, new enactments are there in Sri Lanka, that is the Public Debt Management Act and Public Financial Management Act. Act itself has certain provisions. When it comes to fiscal management, one is the debt management. So here, your investors, business leaders, you know that the importance and the significance of debt, the leverage. It's like a double-edged sword. You can use it. It would really generate more values. At the same time, there is a huge risk. But it's up to us how best we assess these things and manage your debt in a proper way to generate values. But unfortunately, Sri Lankan situation, debt had created lots of problems, mainly owing to the fact that debt has been wasted and misused, and debt has not created adequate value. But we need to live with the given debt. It is not the debt that we have borrowed, the given debt stock, so that whether we like it or not, we have to manage it. And debt to GDP ratio has been just set at 95% of GDP by 2032. Now we are really working on that. Our policy direction, as of now, the IMF and the other experts also said that sometime it would be difficult. But as of now, signs are there, we can reach this target before 2032. So we may face challenges. As of now, we are just living with the 90%, the target. That is number one. The other one is the primary expenditure. There is a cap for the primary expenditure, that is excluding interest. That is 13% of the forecast GDP. And that connects to the primary balance as well. These are key, the variables in the fiscal discipline. So now we have the first half results of the year. The annual target for primary balance is 750 billion rupees. But it is, I'm happy to announce you that by the first half, we have been able to pass that target. So that means we can easily, we can maintain this particular target during the year. Already it is around 800 something. The primary target has been achieved. Primary expenditures have been maintained within the given level. What is most important is the capital expenditure or the public investment. The minimum cap is 4%. The 2025, so now in a way, we are struggling to expedite the capital expenditure owing to inherent factors as well. It is mainly we happen to delay our budget due to several elections. And so, however, we are trying hard to reach the maximum level of capital expenditure within this given target. Because without the capital expenditure, it is not that easy to reach the expected the growth levels. So this is 2025 targets. 2026, in terms of fiscal strategies, again, we need to maintain the fiscal transparency and accountability. Now we can't bring budget proposals in line with the whims and fancies of the ministers or any others. It has to be aligned with the fiscal strategies. So that particular statement has been already published and presented to the Parliament and approved by the Parliament, and that is available for general public. So they know we are going to invest for the capital expenditure purposes. That is the investment. As far as the government policy is concerned, what we think is we invest as much as possible to develop infrastructure, roads, bridges, and digital infrastructure, and whatever the facilities that you need to start your businesses, we do that. So we have prioritized these things. In some cases, we may have to go for design projects or sometimes even with the borrowed funds as well. That is there. The fiscal revenue collection and the consolidation is concerned, from the main three departments, the custom, IRD and excise departments, until now, the month of July, all three departments have been able to reach the targets. For instance, excise department has reached 105%, IRD 101%, and the custom 110% until now. So every month, actually, that is being monitored with a special, the unit. Our objective is to have a consistent policy, the fiscal policy, like in other areas as well, because this matters. unless we have consistent and fair fiscal policies, investors cannot plan properly. Further, we would like to bring the tax rates down while broadening the tax base. As of now, our indirect tax, that is VAT and Social Security contribution levy, relatively high. Altogether, it exceeds 20%. It is relatively high. But as a percentage of GDP, the total revenue, government revenue is now, we have targeted for 15.2% for this year. We can easily reach it. And if our tax base is broadened and tax administration is improved, it is easily we can reach this particular target. Then we can reduce these taxes as well. So this is what we try. So the fairness and the basic principles of paying taxes are going to be maintained and included in our tax policies, and we would really demonstrate these things by actions. And coming to investments, and again the stock market. Stock market is another, the share market, like basically it's a capital market, can exist in different forms. The place where the capital formation could be done in a very effective manner. The scattered capital cannot do big things. The accumulation is the key. So we have an experience, we have a past where the capital market or the investment, especially we know that the finance can operate in many spaces, the real economy, the financiers. If that is not well disciplined, of course, as far as investors are concerned, we would be like, in a way, take decision to earn quick bucks and to maximize your return. What matters at this particular juncture is not to have quick or volatile returns, but to ensure how best we earn sustainable returns. This is our policy directions. If we just take into account the performance in the stock market in the recent past, of course it is a significant development and improvement and the big return. But we have never seen the quick and unnecessary volatilities, quick ups and downs. That means the regulatory authorities, the other agencies are taking strict measures to create a level playing field. Then, of course, lots of potential is there. So the markets should not be simply driven by the sensitive information that could be accessed by the very few. Publicly available information should be freely available to everyone. Our market experience, the previous situation, as I said, the very sensitive information was accessed by the very few. At the expense of others, only the very few gain. Now the situation is gradually being changing. We'll take a lot, from the government side, we'll give our fullest support, but the stock exchange and the regulator would do their also best to make the public available information accessible by everyone. So whereby you need to analyze, just go for the basic, the fundamentals and do the analysis. So by the same way, you can analyze the government as well. Analyze the structure, the context, who we are, what we are really doing, what is happening, and what kind of the changes are taking place in the country. So therefore, I recommend that the Sri Lanka is a good opportunity or platform for the investors to invest with the robust analysis. Going back to the investment opportunities, just to talk a little bit about how we have prioritized. Of course, we are working ahead with the long-term dream. However, we need to prioritize. As of now, lots of investment opportunities are there in the energy sector. Energy sector, referring to the sources that we have, starting from the renewable energy to the fossil fuel energy, even some discussions are going on about this nuclear power generation as well. So there is no problem of the sources. Huge potential is there in Sri Lanka. The experts have already forecasted that the potential is to generate even 50 gigawatts. But what matters is how best that could be channeled to the demand side. That is lacking. So the energy market is there, so you can come up with new proposal. Of course, as of now, we have some connection with India and just the idea of just building a grid. And generation will not be a problem, but how best it could be channeled to the demand side is the challenge. We will work towards that. To facilitate this, the government is going to unbundle the energy sector. There are some criticism about the energy sector, Ceylon Electricity Board, that and this. But we look at energy as not only as a commodity, but as a very key variable that can change the economic growth to a great extent by bringing the energy cost down and creating lots of opportunities to invest in the energy sector. Not even in the generation side, even in the transmission or in the distribution side, the private investment can come in. To facilitate that, we are unbundling the sector. It doesn't mean that because this particular word, unbundling, has been again institutionalized in the society as something like selling off something. We are not really stripping off assets. What we want is to consolidate the things and bring everyone, no matter whether it is public or private investment, together to generate value. To facilitate that, we enacted the new Electricity Act. This particular Electricity Act was enacted within our energy transition policy. We look for a big picture, that is energy. Electricity is within which. So lots of opportunities there. The other sector is the tourism sector. Tourism is also evolving. Many opportunities are there, many discussions are there. Sri Lanka is a destination, attractive tourist destination. We like to take tourism in Sri Lanka as a tourism, as an experience. Maybe just characterized with new elements, wellness tourism, eco-tourism, you may name, there are so many things. We want to create a platform for tourists and investors to have a different experience. I think that is booming and the government is giving appropriate support for that. The other area is the manufacturing. In a way, industrialization has been based on the primary production. Our policy orientation is to create opportunities for more value-added industries. We know that we have constraints on raw materials, accessibility, that and this. However it is, now the production does not take place in the traditional pattern where the one country produces everything. To great extent, you know that it happens through global supply chains. We are ready to facilitate our productions through value-added productions to plug into appropriately to global supply chains. So by exploring the possibilities of the materials, actually we have, even though that is limited to some extent, we have some rare earth materials. Some explorations and research are also going on, including oil and gas explorations. In a way, these kind of investments are long-term investments, may not give you quick return, but highly potential area is that the value-added manufacturing. The other area in the short term, the prioritized area is the modern agriculture, including fisheries. We know that we have not tapped our potential to a greater extent. Huge potential is there in the modern agriculture. New investment proposals are being welcomed, and the ministry is also working for that. The policy direction, in order to support these areas and to thrive as a different industry is the digitalization. It is a fact that without technology, we can't think of any industries to boom in the world in the future. For that, digitalization is going to solve lots of problems in Sri Lanka. As a key priority, we have launched Sri Lanka Unique Digital Identity, the project, and separate ministry also has been formed for this purpose, that is called digital economy. So that is also just continuing. And the key area is the logistic area. Owing to the fact that so our own geographical location, we need to harness the opportunity that we have by facilitating the robust the logistic opportunities. Then discussions are going on, and special cabinet appointed committee was established recently to look at the viability of these projects, to first give the green light in principle, and our governor is also a member of that particular committee. We look at from the macro level to see whether these the projects would really can be facilitated by the government, so that from policy matters. So this is very basics pertaining to fiscal policies and the investment policies. Then we aim to create a level playing field for investors. Through the digitalization and other aspects, we try to facilitate investors to carry out their tasks, especially the initial tasks, within a short period of time through a single window. We know that even in operations of the businesses, since the technology is freely available, and it's extremely difficult for investors to compete with others in material terms, in products, or even with the diversification, even with new technology. Whenever you come out with new things, others also they capture it soon. But still there is a possibility for the investors or the manufacturers to do lots of innovations in processes, in the times, and the operating cycle. If you can reduce the operating cycle in investment, that would save lots of cost, and the cost of the products or the service also can be brought down. We know that there is a problem in Sri Lanka in facilitation, not the operating cycle within the companies, but before getting into the investment, it takes longer time. We are trying hard. As of now, all the different agencies were summoned to one platform and discuss. In the past, they have been operating with their own objective rather than thinking with a common platform. Now, we try our level best. We hope that with the technology, introduction of technology, we can reduce this particular time period, whereby facilitating this particular single window. So, last, I assure that our government is basically the political sphere is concerned. We want the political sphere to converge with the economic sphere with the common objective. But as far as the political sphere is concerned, now, as I just earlier mentioned, I assure and we deliver it, so corruption-free politics, the clean politics. So that would be a big boost for the investors. And the policy consistency and the facilitation for the investors, that is providing infrastructure facilities. So your ideas are welcome. Please connect to ourselves. What we can do is that is what we strongly believe. So in a nutshell, I can tell you that the future investment in Sri Lanka would change the the landscape of the economic development of Sri Lanka. Apart from the policy matters and the other points that I highlighted, we are always willing and looking forward to work with investors around the world, especially the investors in Singapore and Sri Lankan investors are also here, with the concept of collaboration, cooperation, and partnering. So we will work for the common prosperity of the humanity. Thank you very much.
Thank you, Honorable Professor Fernando. And that was quite a refreshing, pragmatic, grounded, and heartfelt commentary about the mantra and the modus operandi that the current prevailing government is taking with investment, ensuring that it's a fertile and conducive landscape to sustain, attract, and grow investments in the country. The strength of a nation's economy is fundamental to the performance and attractiveness of its capital market. That's certainly a truism. I now invite the Governor of the Central Bank of Sri Lanka, Dr. P. Nandalal Veerasinghe, to present his insights on the economic outlook.
Good morning, Honorable Minister of Labour and Deputy Minister of Finance and Development, Honorable Professor Anil Janta Fernando, High Commissioner, and also Professor Disa Bandara, Chief of SEC, and also Colombo Stock Exchange, the chairperson, and all the other important senior management, as well as the participants. And thank you for attending a group full attendance. Quite interesting to see that. So I think in my remarks, it's easier for me to make because it's a lot of things were discussed. But I will try to tell you a story more than the numbers. I think that's just about 10-15 minutes I can finish. So giving more time for the discussion is the most important part of the story. I can remind you. I think when I was here in 2023, the last time, for a small gathering organized by our Sri Lankan friends here, I can see those are still here. This was a difficult time in 2023. At that time, the story I was telling, if those who were present there believed and invested, they would have been much richer now, if they believed that story at that time. Now I am telling you the story outlook for the future. And if you still believe that's going to be realized, showing the credibility of story is now already realized, this I think is an opportunity for anyone to invest in Sri Lanka. So with that, I think let me just give you a brief presentation on what I'm going to talk about. Mainly, I think these are numbers I don't know talk too much. We know we went into a deep economic crisis in 2022, where the inflation went to 70%, GDP growth negative, almost 8% contraction, price of credit contracted, the exchange rate depreciated to 370 official, unofficial 400 rupees a dollar, compared now 300 rupees. Government revenue climbed to 8.2% of GDP, compared now 15%. And fiscal balances, you can see almost close to 12% fiscal deficits, now coming to less than half of that. So this is a story of the recovery, broadly, the snapshot. And then just to elaborate a little bit, the growth story. I think this is the story where we can see the resilience of Sri Lankan economy. If you look at any country which has gone through this kind of a deep economic crisis, and the recovery path is relatively faster, even compared to similar countries that went into a One is the sovereign debt crisis. Secondly, balance of payment crisis. Historically, the worst economic crisis we experienced in Sri Lanka in 2022. From that point onwards, and not only the economic crisis, but during the last 2 years, we all know the political uncertainty, instability, social unrest. With all these things, where this shows the recovery path, a resilience of the Sri Lankan economy going forward. Now we have much more stable political environment, a strong long-term mandate for the current government. I think it's now much easier path going forward to me. I think if past was, the last couple of years were tough, difficult, but still we were able to recover. And going forward, I think recovery should be much easier. That's why I think outlook, when you look at the recovery from second half of 2023 up to now, steady growth of last year 5%, this year will be close to 5%. And if you look at the baseline scenario, the IMF predicted for us to restore the sustainability, we needed minimum 3% growth. So we have overperformed in terms of growth so far. I'm sure going forward, the way the potential is well above the 3%. Which means economy will recover faster, and this sustainability will reach the targets much earlier, as Professor mentioned already, than the baseline of the IMF predictions based on the sustainability. So this is a growth story. And then when you look at the key economic indicators, you can see that 2022, 2023, 2024, and 2025, the steady recovery every year in terms of industrial production, the manufacturing, construction, and business activity. All are shifting upwards steadily in the last 3 years. That's evidence of, these are forward-looking indicators as well. That's across the broad recovery is evident on the basis of historical data as well as forward-looking indicators. Now, on the central bank, I think I should be talking more about the monetary policy. We are the authority to implement monetary policy in Sri Lanka as a central bank. Now, as you all know, after the crisis, in 2023, the Parliament enacted new Central Banking Act, which gave the central bank the necessary independence as a regulator and the implementation of monetary policy for the country, as well as financial stability. So, new act gave us independence as well as accountability for us to meet our mandate of price stability. Under the new monetary policy framework, what we call flexible inflation targeting regime, now embedded into the mandate, and also exchange rate flexibility under the same mandate. And we have a very clear inflation target. This is the most important one. Why inflation should be maintained low and stable is the baseline and core for the stability of any economy. You can see here the Singapore, any other country, stable economy, stable inflation means stable interest rates, stable exchange rate. That's the ensure of the stability. If you want a stable predictability, the bottom line is the ability to maintain inflation low and stable. Since the 70% inflation hit to the crisis in 2022 September, we were able to bring it down to zero within 12 months. Within 1 year period, it was brought down to zero. I show you the next chart. This is the inflation story, that our responsibility. You can see since then, from 70% came down to zero in 12 months. Since then, we have been able to maintain very stable inflation. In fact, there were certain periods of deflation as a result of sharp adjustment in electricity prices, with the improvement in the energy sector. There are some more improvements we can expect. We are gradually coming back to our target from the deflation. It's not a concern because as long as economy is growing at a healthy rate, deflation is not a concern. It's a temporary period of deflation. It's good, especially after the spike in inflation and very high price levels we experienced in the country in 2022. So then we are maintaining a stability, and we can assure you the stable inflation through prudent monetary policy in place is the bottom line and the base for the stability of the country. So this going forward-looking, as I said, is a 5% inflation. Then we can see we publish in a much more transparent manner our inflation projections. Going forward, we'll maintain our target, can even consider bringing it down with the mandate to the government. Now, current target is 5%, which is appropriate for a country like us, which can maintain a relative stability in the interest rates, relative stability in the exchange rate. So, in our monetary policy framework, you can see the interest rate path. Central bank instrument is the interest rate as a policy instrument that we use that to maintain inflation at a targeted level. So this is where we can see we have been relaxing monetary policy from policy rates was 15-16%, now around below 8%. And with that, you can see the market rates on left-hand chart. At some point, there were interest rates well above 30% when inflation was running at 70%. This was necessary at that time to curtail the demand and manage the currency as well. Now we see very stable interest rate environment for the government, for the public, for the businesses, and in line with the monetary policy stance, interest rates have our policy has been transmitted into market rates quite nicely, and also as a result, you can see the recovery in the growth. People talk about recovery in tourism or some sectors, but if you look at the sectorial growth, it's a much broad-based growth story in Sri Lanka. It's agriculture, industry services, and everything. It's a broad-based recovery. All the sectors are now recovering as a result of the monetary policy and low interest rate environment. It's not a sector specific, it's a broad recovery that we are seeing. Even going forward, I can see it will continue for next few years. And how the monetary policy has facilitated the other investment, especially credit, going from the banking sector to the private sector. You can see the crisis period, there was a huge contraction in credit to the private sector with very high interest rates. Now we get steady recovery of private sector credit on the left-hand chart, which shows your last month, 200 billion credit disbursed by our banking sector is one of the highest months that we are seeing steady recovery, which means now there's a crowding in of private sector credit into the economy, which is supporting the economic recovery. And to facilitate that, on the right-hand side chart, I want to show this is ready to start state-owned business enterprises, state-owned enterprises like the CPC, CB, and other state enterprises. Historically, one of the reasons for the crisis is that these enterprises were making huge losses, and they have been borrowing from the banking sector and local resources, finances available. As a result, there was a crowding out for the private sector investment. You can see before 2022, these state enterprises have been borrowing heavily from the banking sector. It was a big business for the banks, but it was not good for the private sector because the resources available to the private sector were absorbed by the government loss-making enterprises. Now, with the new policy of important reform that was implemented during the IMF program was the cost recovery pricing for state-owned enterprises, utilities. As a result, you can see those enterprises now paying back their huge debt that were accumulated during several years with the banking sector. Now they are paying back. As a result, there's a crowding in impact for the private sector. That's why credit is growing fast, but that is not a concern because overall credit is stable because state-owned enterprises are paying back because of the cost recovery pricing. It's an important policy, important reform that was implemented in the recent past, last 2 years. As a result, now there's a lot of opportunities for the private sector to grow. That's why we see reflection in the stock exchange, also part of that growing credit and financial intermediation to the banking sector. And other important part that led to crisis, you can see that before 2022, under Central Bank Act, there's a lot of monetary financing of the budget deficits. Not only government was running large budget deficits of close to 12%, couple of years, and all 12%, half of that was financed by central bank directly, monetary finance. You can see the right-hand chart, how the build-up of central bank financing to the government came to peak. And since 2022, we have been able to curtail and bring down stop the monetary financing, and then can see other side, the central bank holdings of government securities now stable and coming down, which means that is one of the reasons why there's a lot of credit available for the government and to the private sector to grow going forward. This will be the future as well, because under the new monetary policy, new central banking act, there cannot be any monetary financing that assures a stable inflation going forward. That's assurance of inflation remains stable, and currency and interest rates will remain stable under this policy. And one of the important factors here I want to highlight, a lot of people talk about the foreign exchange earnings. This is important chart on the second left-hand side is the red line, is important one, is the country's external current account balance, which is country's foreign exchange earnings versus expenditure. If you look at historically, after 77, when the country was opened up for, liberalized for the trade sector, since then, current account, country has been earning less foreign exchange earnings than we have been spending more than earning. Current account has always been a deficit below zero line up to 2022. The last 2 years, it has been this is the third consecutive year we are going to record the current account surplus, which means foreign exchange earnings are going to be higher than what we spend in terms of imports and other expenditure. It's a steady third year. The part of the reason you can see the fiscal policy, other blue chart, that is important point I have to make here, is the fiscal consolidation and fiscal discipline. That certainly helped. Historically, if you look at the close correlation between what we call the twin deficit story, large fiscal deficits is the one that drives large current account deficits of the balance of payment. That's a very close correlation. When you look at the transformation, when the fiscal policy moving into a fiscal consolidation and less fiscal deficits, will certainly transform into a more stable current account surpluses or stable current account deficits. That is the important part. That's where going forward, as Minister mentioned, as long as the government maintains fiscal discipline, lower deficits and primary surpluses, then that will automatically ensure the current account, stable current account position, which means the stable currency going forward. What is important, the message here, as long as government runs fiscal discipline, we'll see a stable currency, we'll see a stable current account surpluses, we'll see a stable macroeconomic situation. We have seen last 3 years is not because of the restriction on imports. It's because of the transformation of macro policy management through fiscal policy, transforming into a broader current account of the external balance of payment and reserves. This is where basically the sources of this current account surpluses, partly the exports are doing relatively stable, and then obviously remittances is a large source of foreign exchange earnings, plus the tourism is also doing extremely well. Those three sources together now generating a stable current account and stable currency. And as a result, you can see the build-up of official reserves. And at the crisis, it was close to 1.9 billion with Chinese PBOC swap of 1.5 billion. Available liquid reserves, usable reserves were only 25 million when I took over in 2022 April as a governor. And since then, we went into a strong reform program and were able to manage to build up resource from that lowest point to now over 6 billion. End of this year, certainly will be built more than over 7 billion, and next year will be the highest level of external resource that we are going to have in this country, especially with stable resource. Earlier we were building up resource, coming to the market and raising more external borrowings, whereas this time our reserve build-up are organic ways of through current account surpluses. That's why you see central bank interventions in the market on the right-hand chart, is this build-up of reserves not out of external borrowings of the government. This is out of foreign currency surpluses in the market through remittances, exports, and this tourism. That's why we have been able to build more stable resource, which is much more stable than the resource we had earlier. Maximum was 8 billion, sometime back in 2019, but still that was large part was borrowed money by the government, but this time it's much more stable foreign exchange earnings. That's the stability difference of this resource versus earlier resource. And this reflects also this important one for the investors. Predictability of a stability of the exchange rate is fundamental. You can see the crisis period, official rate went to 365, 70, and we all know black market rates over 400. Now it's much stable, 300 rupees, and very predictable and stable currency. That's the foundation for the stability for the businesses and any investors. You can see last 23, 24, Sri Lankan currency was is one of the best performing currencies. This year, some small depreciation, but it's a path is quite clear and quite stable. We can see that exchange rate management and the foreign earnings are much more comfortable now. Obviously, we have to build more. And here, fiscal policy, I'm not going to talk a lot about because the professor already talked about. But I see here important part is the historically there was a lack of fiscal credibility in the fiscal policy in Sri Lanka. If you can remember, people who are familiar with Sri Lankan story, every year finance minister goes to the parliament, announce a budget with revenue target, expenditure target, the fiscal deficit and debt target. Is all the time targets were underperformed. Revenue target, if announced, say 10%, achievement was 8% of GDP. Every year since 1977, I think. The difference now is that what was the target announced and its overperformance. That's what the professor just mentioned, finance minister. I think that's a cornerstone of this stability going forward. So that's, I don't want to talk too much about the government expenditure. Also, good part of revenue collection of overperformance revenue is that government ability to spend that money for productive investment, public investment. A lot of space for the government to spend money and plow back that tax expenditure to areas that they want to make investment much more productive and invest in the areas that is necessary, priority areas. There's government space and buffers being created. So there's a lot of flexibility in fiscal policy now compared to last. Just to talk a little bit about the IMF program that and I'm one of the persons who were involved right from the beginning, starting from the negotiation of the debt and the negotiation of the program with the IMF in 2022, from 2022. There are 5 key pillars. This is the foundation of the program that we agreed with the IMF to get the support from the multilateral agencies like IMF, World Bank, and ADB. So first pillar is obviously revenue-based fiscal consolidation and structural reforms. Those are very well, in fact, implemented so far, very successful path here, as already talked about. And in terms of structural reforms, public financial management and public debt management office, those are key reforms. Those are already implemented. And the protect of poor, social safety net is other important one. The crisis, poor people are the most affected. So that's so it's important to protect the poor, and social safety net is social stability is a cornerstone. That's the first pillar. Second pillar is to restore public debt sustainability. I talk about a little bit. Where the debt restructuring. This was a sovereign debt crisis. Without restructuring of sovereign debt, there was no way out. When you look at the countries went into sovereign debt crisis, I think we were able to come out within 2 years. And that was a successful story. Even with the unstable political environment, this is the third government I am working, but still the political stability was not there for a longer period. Now, with all these challenges, we were able to restore public sustainability, and debt targets will be achieved much earlier than what we thought. And third pillar is monetary policy and financial systems external resource that we have already talked about it. And fourth pillar, let me talk a little bit about the safeguard financial system stability. That's one of the central bank responsibilities. During the crisis period, I know Sri Lankan banks, a lot of concerns that banking sector, there would be a banking crisis as well on top of sovereign debt crisis and the balance of payment crisis. If we had a banking crisis, that would have been the end of the story. People would have lost all their deposits and savings. But with prudent regulations and managing the banking sector, we were able to protect. We didn't have a single bank failing during the difficult period. Interest rates went to 30%. And exchange rate depreciated by 45%, but still we were able to hold and maintain banking stability. I see a lot of bankers here. The time was tough, but that was the prudent financial stability policies where we were able to protect the depositors, protect the banking system. Now banking system are well placed, well capitalized, well liquid, both foreign exchange and rupees, and now supporting the recovery of the economy. That's important one. Then fifth pillar is important one. Otherwise, Sri Lanka has the credibility of corruption vulnerabilities. That's where this government has strong mandate. This came into power with this strong mandate. The government is strongly committed, as already the Professor mentioned, this address corruption vulnerabilities. This is Asia's first report on the addressing corruption vulnerabilities done by the IMF, independent report already published, and there are certain lot of recommendations. Those are very seriously now pursued by the government to implement all these things. Third path is the next path of reform, growth path. Now stability is there. Now stability should be maintained. That is the foundation for the growth, and growth, that's where the professor talk about areas for the growth in going forward. And there are a lot of other reforms should be taking place. So on the side, public debt restructuring, we have achieved all the debt restructuring elements already completed within 2 years. Small last mile is the Sri Lankan airline restructuring a small amount. That also government is working hard to complete that part. Once that is done, this is where area I think our rating still, sovereign rating is still from default to CCC+. But what's preventing our rating going forward is the small Sri Lankan airline restructuring is left still. I'm sure government is working seriously to complete that. I think that once that is done, we are now all set for next level of rating upgrade to B level. This is where I think, what I see, sorry I'm telling today, if you wait until ratings go up to B level, you may be too late. If you come now, this is the time. This is the time. Because that's what, sorry, I told when we were in the default category. I was saying 2023, don't look at the current situation. Believe the story that I was telling. If you took the innocent decision at that time, you would be much better. Even now, still there's a potential for sovereign rating to go up pretty soon. As that goes up, you can see the market reaction, and this is the time for you to take the advantage of that. So this final slide, I think economic crisis, very well managed, debt restructuring almost completed, price stability, zero inflation, key reforms for the stability, all financial systems are done. There are strong buffers in terms of external buffers, in terms of resource, monetary policy buffers, in terms of interest rates, 5% interest, 8% policy rate means there's still space for us to use if there's anything. And fiscal buffers. Compared to fiscal, government running a 1 trillion deficit with the state banks, now running a 1 trillion surplus, rupee surplus with the state bank. Those are key buffers. Monetary policy buffers are there, external state buffers are there, and also the monetary policy buffers are there. And reforms are ongoing. State-owned enterprise reforms, Professor Min talked about. IMF program on track for another 2 years, which will ensure the completion of extended fund facility program with all the reforms successfully implemented. So these are the way out. I think with that, I'm sure the panel would be much more important for us to clarify anything. With that, let me stop it. Thank you very much.
Thank you, Dr. Veerasinghe. As you started up on the podium here, you alluded to a gathering in 2023, and I recall that quite vividly, and to say that you were facing the eye of the storm was probably an understatement. But what you have heard and seen, the sound bites and the data points shows that the prudent use of policy tools, data-driven actionable insights, and a conviction to enact policy reform has helped the country to turn the corner, clearly. There are headwinds and challenges, but we are on the right trajectory towards growth. We now move to our first panel discussion of the day, which will explore the outlook of Sri Lanka's economy in light of the prevailing global uncertainties. Once again, please welcome to the stage the Honorable Professor Anil J. Fernando, the Minister of Labour and Deputy Minister of Economic Development. I He does a bit of a boomerang again. Dr. P. Nandalal Veerasinghe, the Governor of the Central Bank of Sri Lanka, to share their insights on navigating the current global environment while continuing Sri Lanka's growth momentum. Now, moderating this discussion will be Avril Hong, Singapore reporter for Bloomberg Television and Radio. Avril is a Singapore-based reporter for Bloomberg TV, providing roundups and analysis on markets and the economy for Bloomberg Markets Asia, Daybreak Middle East Africa, and Daybreak Europe. She previously anchored business news on Channel News Asia's flagship morning show covering key events and has interviewed many business leaders, central bankers, and economists. Just before we dive into this rather riveting session, there will be a QR code that's going to be put up on the screens. I would encourage you, you guys know the drill, I would encourage you to actually use that to pose the questions, and that will help Avril pick them up as the panel discussion ensues and address them in due course. Thank you.
Thanks so much, Manjeev. And great to have you both, Governor and Minister, on stage for this panel discussion. As Dr. Nandalal was alluding to earlier, Sri Lanka has bounced back from the depths of the economic debt crisis of 2022. And a large part of this is driven by strong tourism, the IMF bailout as well. But the worry is how potentially these US tariffs could derail the recovery. And amid all this, absolutely crucial to keep at the rate of momentum for reforms, to keep at growth, revenues, FX reserves, so that eventually there can be that paying back of restructured debt. Minister, let's start with you. The tariff backdrop, that is a key overhang. Today we are hearing how the US and China, at least there is an extension of the truce. For Sri Lanka, it's managed to negotiate down the tariff rate from 44 to 30 to 20%, but still there are uncertainties. What is the main risk to growth in your view?
Thank you, Avril. Yes, it is. As far as the tariff issue is concerned, through proper diplomacy and the prompt mediation into the issue, we were able to bring it down to 20. However, it's an impact of an external factor. It was not something came up as a result of the bilateral trade between the United States and Sri Lanka. It is a fact that's a global issue, and unilaterally the United States took that decision. So promptly we just intervene and manage it. So that is an external, because from time to time many external issues would come. Of course, we need to deal with these risks. We have the potential of managing. So you just ask what is the real risk of navigating the country towards the development. I think I don't say that is a risk, but rather the key thriving point is none other than investment. So investment is the key, because the value generation is very important. If we try to manage the risks and other things with the given space, fiscal space, and the given investment, what we can do is very little. So that new investment is needed. Still in Sri Lanka, like in other countries as well, always you see the gap between savings and investment as well. We are trying hard to accelerate investments, local investment and the foreign investment in the first place by facilitating. But since like investors, you know, that always assess the risks to great extent. When they look at Sri Lanka and the prevail situation, stale situation, and the corrupt politics and all these experience, they may buy time. So still, like, even though we just say that our government, the policy and how best we are trying to navigate the country, still investors may have a little bit suspicions. So that could be another risk. So these kind of platforms and discussions and the making information available, these dialogues would really reduce these particular risks. And if that can be done, I strongly believe that Sri Lanka is a very good destination for investment, where genuine, robust, sustainable investors to generate more and more value.
We'll also pick up on your point on how investments could help offset some of these potential growth risks in a bit. But Governor, I wanted to bring you in here. What is your assessment of the growth risks?
Yeah, I think when this US tariff obviously is an external shock, we all understand that it's not common to Sri Lanka. Whenever we have this external shock like the pandemic, is a similar one, unexpected external shock. How prepared the country is to face that shock is important one. Right now, as I said earlier, external shocks can come anytime, unexpected. Important one is to prepare and create buffers for us to meet, support the economy if needed. So right now, first part on the internal policy side, we have monetary policy buffers, the fiscal buffers, and the reserve buffers for us to use if there's any short-term impact on this system. But at the beginning, when 44% was imposed, obviously we were very much concerned. But later we were able to negotiate to a level 20%. I also was a part of the team. And this level, I think we are much more comfortable. I don't think when the discussion with the IMF also, at that time they considered if 44% was imposed, we needed to have a different outlook and also different IMF program. They're willing to support if that is needed. But right now, it's like a status quo. What we earlier predicted, we are comparative basis, we are at the same level,
right,
and even sometimes better than some of our competitors, if you compare. That's why I think there could be obviously trade diversion can happen. My assessment is that trade diversion could be beneficial for Sri Lanka in the current context. If this tariff regime differentiation persists for a longer period, we are here to benefit, and also that to create opportunities for our exporters. Have much more market access to certain markets, especially our markets are not China or India, its markets are EU and the US mainly, the West. We are competing with India, China and other markets. So we are in a much better place than where we were before this tariff imposed. That's why I think this is an opportunity for us to, I don't think we need to use our buffers. We are well placed in the current context, but you never know, this is a highly unpredictable situation. It could change by the US administration, but we need to get ready if there's any change. How we can move in and support the economy is a key factor. There's an internal factor. Externally, I think we are in a better place now in terms of level of tariffs that our exporters will have to face compared to other markets.
So what is your sense of the need eventually for easier monetary policy? Now you say that it looks like a better backdrop, but going into next year, how confident are you that the growth momentum can be kept up, and how much further does monetary policy need to help support that?
Yeah, exactly. I think when you look at the monetary policy, the forward-looking basis policy, looking at the forward, what is the potential growth and what is the inflation outlook. So right now, expectation is that inflation will come back to our target level 5% within next year, and growth will steadily current close to 5% growth compared to IMF less than 3%. That momentum will continue. So if that is going to be the outcome, I don't think we have right balanced monetary policy. But what's good about it is that if there's going to be any impact out of this any external event, we have a space in the monetary policy for us to support the local economy. That's where, say, inflation is 5%, our policy rate is 7.75. It's a good 2.275 real interest rate is still there forward-looking basis, which means we can bring it to zero real interest rates if economy needed that support. But without needing that support, pushing it through can create bubbles or burst cycles. That's where I think we have a good space for us to use going forward, depending on the outcome. Right now, we don't see a risk at this point. We saw a risk in April when this was announced, That's why we were using very carefully the space we were having.
So, what would you say would be the one metric you're watching the most closely to determine whether you need to step things up?
There are two things. One is the external demand coming from kind of this shock, whether our exports earnings are going to be coming down. There is going to have impact on the local employment and the output. That's one part. Second one is the credit flowing into the economy. That is flowing right level, as I mentioned earlier, or is growing slower than what we think. Then we had to push it through faster. If that is growing too fast, we have to act to break that thing. So that's where key ones, inflation outlook and the output gap that we see is there's a variation. Then we have monetary policy tool to act either way, and we can use that instrument. So these are the key things we are looking for. Key one is external because of the external uncertainty. Domestically, I see that fiscal policy quite stable, so I'm not too concerned about the fiscal impact on the monetary policy.
Minister, Governor is just talking about this external uncertainties. Amid these tariff negotiations that Sri Lanka has engaged in, there has also been the need to address what the US sees as Sri Lanka's trade surplus with the US. How is that going to be potentially reduced? Where are potentially some of these US imports going to be coming more from?
Yes, actually, this is the reciprocal. So basically this is the 20% or the 40% initial imposed is a reciprocal tariff that is connected to the trade gap. So the discussions are going on. Of course, based on the existing the tariffs and border tariffs basically, and some the para tariffs as well. So that is just continuing. So there are different line items. Then we need to discuss how best we just take one by one and what are the possibilities. As of now, when we take the individual the border tariffs, so that is not that big. Like even with the United States, the most of the items, so the range from 0 to 20. So on about at the top of this, like, so that was the prevailing situation. The reciprocal tariff is something that just came as a result of the external factor. So therefore, we should not really get it confused, the border tariffs with this the reciprocal tariff. The reciprocal tariff, the idea and the argument, yes, to reduce the trade gaps, but again connected to tariffs. So the discussions then they are continuing to look at these individual tariffs, as long as you highlighted, investments, the avenues as well. Of course, we need to do an analysis that is being done, what items can be imported and what investments can be promoted, the likewise. So still, we have not reached an agreement. So this is the result of the ongoing discussions. Then we may be able to make a joint statement maybe in the future or reach a bilateral agreement in the future. So where we can take all those things. As of now, the discussion is continuing.
Would you be able to share a sort of timeline on potentially when a joint statement might come?
Actually, we cannot predict a timeline because this is a global issue. It is connected to trade and many items are there. So sometimes, we are happy to say that these discussions are going on very transparent manner. So the US, the TR also just commented the way that we continue, because very openly we are discussing. To be honest, we can't say a timeline.
Okay. What are the likely US investments into Sri Lanka then, and how do you think Sri Lanka can perhaps build a better, even better ecosystem to attract that?
It really depends on their investment appetite as well. As far as Sri Lanka is concerned, not only for the United States, but also for any investors, the investment opportunities are available in our prioritized areas in energy, the transportation, even the modern agriculture, even as I just told, the value-added areas. So those are the possible investment channels. Even the both sides, the US or even Sri Lankan investments can see the opportunities in the United States as well.
Dr. Nandala was talking about how, given the rather competitive tariff rate, it can also be seen as an opportunity for Sri Lanka. Are you already seeing early signs of that in terms of more exports to Sri Lanka, for example, the reshuffling of trade? Is that benefiting the country already?
You mean to say like more exports to Sri Lanka? Or?
In terms of the realignment of trade,
Sure.
you have the likes of India. Maybe it could be hit by 50%. Are you seeing a bit of benefit to Sri Lanka amid all this?
It's like this. Actually, if we say that because of the high rates or the tariff rates for others, and we might get more opportunities in the United States markets, may not be lasting long. Like it is only one part is the tariff, but on the other hand, these goods are connected to the consumer behavior in the United States as well. However, it is, as the governor highlighted, with the given situation, we have more opportunities to be in the competitive market in the United States. At the same time, opportunities are being opened in the other areas as well. Of course, our export market is really dominated by a selected the markets and selected products as of now. We are in a move of diversifying our markets as well, rather, because when we take our garment exports, 25% of the garment export goes to the United States out of the total. And the trade gap is also significant. That is the reason why we were placed as the 44% initially. So our strategy is to deviate from the existing the markets, whereby diversifying the markets and the product diversification as well. So entering into sub-Saharan African region and the Middle East and Europe, even the United Kingdom has under GSP Plus, since that's a kind of opportunity for the developing countries, especially developing countries. That is what we call developing countries tariff scheme. That is available for countries like us. As of now, we have been offered 0%. So, I mean, we can't say that simply just taking one incident that entire our export would be driven by a decision on this thing, but that is totally external. We try our level best to manage the external factor to gain the benefits for us, whereas diversifying our markets by seeing the opportunities in the other areas as well. I hope that this is in a way a big opportunity for us to look at these aspects.
Governor, the textile industry is a big contributor to forex reserves. What are you seeing as the potential impact to foreign exchange reserves going forward?
Right now, I think when you speak to apparel exporters, they were certainly concerned about the 40%, 30% tariff. They were not being able to compete. But right now, I think they are in a position as they were earlier. But going forward, I think, in my view, there could be a lot more opportunities created for Sri Lanka. I think just to link to a question you asked earlier, the trade is usually trade like flowing water across the countries from the high to low, is surplus to deficit. So if someone erect a barrier somewhere else, what will flow in a different route? So that's what your question to us, the China or India, this, if they import a barrier there, this flow will go in a different way and still we will have market access. That's I think that no one can stop trade happening. As long as US consumer consuming, then trade will happen, trade should happen. Problem is that from where this can happen, from there they can source raw materials, where they can sell their products, could be different markets. When you have a barrier somewhere, then it will go in a different way. This way I think there are a lot of opportunities for us, especially our exporters, both in exports and imports as well. So imports, for example, we are anyway importing country, especially energy raw materials. If you open up market for the US, if they are competitive, it should be benefit out of the lower import prices, products where we don't produce in Sri Lanka. For example, energy, gas, some of the raw materials, they can import at competitive prices because of the barriers in trade other side. We still can benefit our export industries as well. And they can be much more competitive by bringing those raw materials at lower cost. I think that's why I see this as an opportunity also. And this understanding of the businesses to create this opportunity, understanding where the markets are, understanding where the cost of production, then they should be able to, dynamically move their businesses and prepare for the markets going forward. I think I'm sure our businesses, especially export businesses, are not subsidized by the government. It's all market-driven private sector investment. They know very well where the markets, how to move their markets, how to access their markets, where networks and the production capabilities, and moving this high supply chain. Should look at Sri Lankan apparel industry especially. Started like Bangladesh, very low-end products. Now we are at high-end. And it's in the global supply chain, we are at the niche market, not necessarily a market where we are mass productions. We don't have that capacity, but our advantage is to high-end value addition in all the industrial goods. That's where I think still I see there's an opportunity going forward.
Since you raised that point, I just wonder, because there is a view out there that given how businesses are looking to diversify, they might still be a bit restrained at this point of time until the transshipment issue, there's more clarity on that. We don't know quite how the US administration is going to navigate that or define that issue. Do you agree? Is that a fair assessment that for the time being, maybe businesses might be more restrained?
There's certainly uncertainty how they're going to address that. So if you look at all bilateral trade announcement by the US administration, there's this something called transshipment as a restriction from certain markets. So how they are going to address that is still not very clear, but clearly the rates those are given to countries that we have engaged more actively are much more favorable than other countries. So the transshipment issue is you see, if the raw material is produced in one market, you can't immediately move that market out of the, for example, our advantage is rubber-based products. Sri Lanka has the largest market share in solid tires, rubber-based tires in the world. I don't think within 6 months or 1 year, this production can be moved out anywhere, even those countries offer zero tariff. It's not an easy cost of production or moving the production out of the country in a shorter period. Still, the consumer there will have to pay a high price if that's something higher raw material. But these kind of things, we are advantage because we have rubber-based products in Sri Lanka. We are low rubber producer. And as a result, I think it's not that our technology can be moved out of even like Bangladesh, huge production. From where they can move out, this mass scale production, even China mass scale production, where then can move out in a short period. That's going to be a huge impact on the global economy. That's where I see, my view, what I see, the US administration also looking at this carefully. That's one of the reasons they are still giving China another few more months to see what could be the best deal for the US and reduce the trade surplus or deficit with the US, and how best they can also mitigate the risk of not having goods coming to the US market for their economy to grow. That's where whatever the trade tensions, still they are carefully looking at and see the minimum impact, how they can manage. That's why I think it's a challenge, and problem is uncertainty, and no one will make investment, especially with uncertainty, but it will create opportunities for trade. That's what I see, the trading opportunities for businesses already existing. They can expand.
Let's talk about some of the longer-term investments. I mean, we know how, for Sri Lanka, some of the projects, including the revival recently of the LNG terminal tender that was scrapped by the previous government. What were some of the considerations for the government? Why is now a right time to revive that?
Yeah, of course, the government is the reviving all the opportunities for investments, like in other sectors as well, especially this energy sector. As I highlighted in my speech as well, the biggest issue as of now is not only to select the best mixture of energy, but the ability and the capabilities of the government to channel it to the demand side. So just steel projects, LNG, or maybe the refineries, and especially the renewable energy, the solar, wind. Likewise, there are many in the pipeline we are considering. And in these considerations, apart from the other factors, one key factor that we look for is the future cost. As of now, the energy cost, even the power purchasing agreement formulas that and this, some issues are also there in a way. If we happen to buy at a very high cost, no matter whether it is a quick investment or not, but how best we can bring the energy cost down. The energy forecasts, especially Global Energy Forum, has forecasted that the renewable energy cost would gradually go down to significant amount, whereas the capacity for renewable energy is increasing. So therefore, while we are assessing the reviving the project, we need to take into account these two factors, the cost minimization and the giving opportunities for the capacities as well. It is not that we have just ignored, we are considering. And this, the electricity and energy is basically looked at from a very broad perspective of energy transition. So this is what I highlighted in my speech, the unbundling the electricity through the new Electricity Act within the major scope of the energy transition. That is what we are looking ahead in the future, just to get the best out of our potential.
What is your sense of the potential from this LNG terminal and how this could mean an aid to plans for US energy imports and how that could be a part of tariff negotiations? Is that how you're viewing things?
Actually, the possibilities can be taken into account, but we did not specifically took each and every item and linked it to this tariff negotiation. From the energy sector is concerned, on the other hand, of course, there are lots of arguments for and against about the different sources of energy, LNG, renewable, coal, likewise. With the given context, just until we reach to the low cost, the renewable energy strategies, maybe 2030, the issue that we have in our hand, then the LNG would be a good solution. Because always we cannot take only the cost factor. We need to take into account other aspects as well. So the possibility is there, not only in LNG, in the other areas as well.
What about some of the other projects that we know of in Sri Lanka, how there was an investment agreement, $3.7 billion signed with China's Sinopec?
Yes.
What are the details you can share with us on that? When is that project likely to get off the ground? When do we see funds flowing?
Of course, the Sinopec agreement, it was awarded in 2019, I suppose, for a small amount of investment, relatively. As I remember, 1.7 billion. Now it was increased through MOU to 3.7. Since that is the hugeness, it takes some time. As of now, the basic, when it comes to tax-related issues and other things, there is a little delay. As of now, what I can say, it is in the final stage. There are few things yet to be agreed upon, but almost it is done. Even if the execution starts, it takes maybe a couple of years to see the visibility. owing to its the magnitude. Yes.
What are the key sticking points now?
The sitting point we are talking about is the market accessibility and the demand for energy. And as of now, in Sri Lanka, the daily the requirement is around 140,000 the barrels per day. This investment has a huge capacity. The investment capacity has been doubled. So since it comes through BOI agreements, so there are limitations about the accessibility to local markets. So we are discussing these things. Even if we just open it up for more accessibility, still there is a demand constraint. So within which we are discussing, and meantime, we are exploring the possibilities of exporting or maybe bunkering, and mainly due to our geographical location, the energy, the production is not only for the Sri Lankan market, but also the potential is there for the exports and the bunkering. So that potential is there. So therefore we try our best to broaden these discussions to explore the possibilities in the export markets. If we just limit the discussion only to the local market, it is highly limited, because as of now we have Sri Lanka as our own refinery as well. And within the overall energy transition, we do not want to limit the energy productions and the players to very few in the future. We need to keep it very open. So this is how the discussions are going on.
So you said soon earlier. How soon do you think?
Yeah, within this year.
Okay.
Within this year, we hope to finalize it.
Okay. Governor, let's bring you in. I mean, I want to talk about, some of, you alluded to how the rate of progress when it comes to reforms, fiscal consolidation, that has been very encouraging. I wanted your assessment on how feasible you think an upgrade to B1 rating by 2027 is going to be, because Sri Lanka is going to need that to tap global capital markets.
I think 2027 is too far away, no?
We look long term here.
Yeah, of course. I mean, by the time we should be anyway in the B grade, I'm sure. I think what I see, as I mentioned earlier, why we are in a CCC grade is mainly because of the not completion of the small part of Sri Lankan airline debt, government guaranteed. I'm sure government is working hard to complete that. Once that is done, then we are set to move up into the B grade, probably starting in B minus. Then this depending on the progress, I think we can go fast. I'm sure if we make the same progress like we had done last 2 years, and this is not a challenge for us to move higher in the sovereign rating. So it could happen much sooner. And market tax is a different thing. Once you get into B, we had earlier market taxes on the B grade. It's up to the government to decide whether government need to go to the market and raise external borrowings, or whether country can generate foreign exchange earnings in other means, so that we don't need to go to the market and raise. Those are the things that we have to think about going forward. I just must say I have to leave in 5-10 minutes. If you can ask questions, if there are anything, because there's another commitment. I think they're asking me to come.
Oh, yes. I actually saw Minister smiling, so I wondered if you wanted to just very quickly weigh in on what Governor was just saying.
About this, the market accessibility, right?
Yes, and about the progress that's been made on fiscal consolidation.
Yeah, of course.
So far.
Actually, as far as market accessibility and our intention and policies are concerned, we need to look at what we are really doing. Like, so basically, we are in the debt-ridden situation. Like, we need to manage that debt to GDP ratio. So that is one key. And in order to deal with this actually the foreign debt is the issue, and the foreign reserves matters. The accessibility to the global market to borrow is one of the options, and it is always good to keep that open, available and readily available for us at any point in time we can access. That is really a good thing. As Governor highlighted, their credit rating is really going up. And parallelly, we are doing the other things as well, just expanding our exports and they try hard to increase the revenue from tourism and foreign remittances and the foreign direct investments, so the specific project, the targeted investments, likewise, even bilateral the borrowing. So we have different options as well, always keeping this the market accessibility soon. We hope that we can have this status sooner than predicted. So it was predicted to be in 2028. Now there is a possibility. We'll see, we utilize the opportunities wisely without destabilizing the present situation and providing guarantees for the investors that the country would really continue as we plan.
Okay. I think I'm going to take some of these questions from the audience and surface them to both Governor and Minister now. A lot of very good questions, so I think we have to be a bit selective here. Among them, this question coming from Louisa Thomas: how much FDI has come through current residency by investment programs, and are these inflows contributing to Sri Lanka's debt recovery? Maybe, Minister, you'd like to take this question.
Yes, the FDI during first 6 months, it's not big, because if I say big numbers, it's wrong. According to BOI statistics, the foreign direct investments is around 500 million. But through BOI investments, that is also foreign direct investment, there's a local part as well. It is around 760 million. Altogether, 62 projects. There are some constraints. One constraint is this: a time taken to get the approval and the licensing and the thing. So the other issue is still investors also just assess the current situation, whether it is really stable, whether future prospects are there. However, within this particular short period of time, this 760 million FDI is a good signal that the investors are gradually building the confidence in Sri Lanka.
Okay, another question. FX reserve accumulation has slowed in recent months. What is the reason? How confident are you that reserves will reach the IMF target of $7 billion by the end of the year?
But I already mentioned, definitely we will reach about $7 billion end of this year. Obviously, there has been some slowdown because we started repaying some interest payments, some of the foreign currency debt obligations, local banks. As a result, although we have been increasing not at the same pace like last year when we had suspension of the service, now we are building, including with servicing government all external debt obligations and all foreign currency debt obligations to the local banking sector, that they had this thing. So while doing that, improving this is to me is an achievement. Because we have been servicing debt on average $3 billion now annual every year, while servicing and building that over and above the levels without raising commercial financing is an achievement. So we certainly will be building over $7 billion by the end of the year. There's no question about it.
Okay. This other question is related to what you presented earlier in your slides. If Sri Lankan airline bond is the impediment to the sovereign upgrade, what's the holdup, given the $175 million outstanding is small on relative terms to the benefit?
I don't think that negotiations are taking place. I don't think we should talk about it. There's a NDA basis, confidential discussion. I'm not engaged this time. This government team is engaging with them. But all I know, S&P specifically mentioned, this is the thing that prevented them upgrading. A small, even dollar default is a default for them. And others also, this one has some impact on the ratings.
Okay, we're running out of time, but just one final question. How fast can the government ramp up infrastructure spending to increase efficiency within the country? For example, when will the Central Expressway be completed?
So sooner the better. We try level best to finish it soon. As far as the Central Expressway is concerned, the first part, the Kadavata, the Mirigama one, it was stalled and the financed by the Chinese Exim Bank, and we happened to the renegotiate for the loan. The loan that had been used in the past was not adequate. Now it's not adequate as of now. We need to get more funding. As of now, the negotiations have been finalized with Exim Bank, and the negotiation with the existing contractor also has been finalized to some extent. When something is going to be revived from a stale position, it takes time. We may have to find more extra financing as well. So that is not adequate. In case, now the government is ready, in case if we would not find the additional funding, we are going to use the money from the consolidated funds. As of now, it's quite possible since we have collected adequate revenue. The other parts of the expressway are also being discussed. In addition to the Central Expressway, we channel all the capital investments to other infrastructure as well. Not only the highways, the rural road developments, and even the airport expansion project, that is key investment, and the harbour ports developments, the airports. Likewise, we think all the aspects to channel the available money for infrastructure from big to small, that goes down to the grassroots level. So within this year, we try to at least the big projects to start, even though we will not be able to complete within the year.
All right, there you go. Along with that, a strong case for Sri Lanka. Governor, Minister, thank you very much to both of you.
Great pleasure. Pleasure meeting. Thank you.
Thank you to our panelists and also to Avril for that rather thought-provoking discussion. Judging by the flurry of questions and some very, very specific ones, I think there's a lot of opportunities of sidebar discussions in the networking lunch to follow, as well as the one-on-one sessions. We now move to our second panel discussion, focusing on the Sri Lankan equity market outlook. This session brings together distinguished market leaders and investment professionals to share perspectives on equity market trends, performance drivers, and what lies ahead for investors in Sri Lanka. Our panelists for this discussion are, firstly, Mr. Ruchi Desai, Fund Manager, Asia Frontier Capital Limited. Please come over to the stage, sir. Dr. Naveen Gunawardana, Managing Director of Linear Wealth Management, converging from all ends of the room. And of course, you're already familiar with Senior Professor D.B. P.H. Desabandara, who is the Chairman of the SEC. I'd like to welcome him up on stage as well. And last but not least, Mr. Ray Abewardana, the Director of the Colombo Stock Exchange. Moderating this discussion will be Ana Isabel Gonzalez Encinas. And I sincerely hope I've done justice to your good name. She's the Chief Investment Officer of Farringdon Asset Management Private Limited. Ana holds a PhD in quantum economy. With that, I would assume that she's within the upper echelons of the intellectual spectrum. And we are all falling short compared to her, and brings over 20 years of global experience in financial services and asset management. She has previously held senior leadership roles at EFG Bank and the Bank of Singapore. Ana also has led investment strategy and developed proprietary equity models and designed multi-asset solutions for clients across Asia and Latin America. And I'd have to actually thank the Singapore-Sri Lanka Business Association for introducing us to Ana and also helping to facilitate this discussion. So, take it away, Ana.
Thank you. It's a really pleasure for me to be here. It's an honor to be surrounded by this dialogue. today, in my case, I would like to know more about the stock market and then what is the things that have been happening lately. The questions is for, the first one is for Ruchi, what is working for Asia Frontier Capital, that it has been invested in Sri Lanka, and then it's like you are an expert in frontier markets. So I would like to know a few things. Is basically what is the particular things that Sri Lanka has for you, and then what is the things that attract you to invest in?
Well, thank you for having me here, firstly, and thanks for the great question. So yeah, I mean, Asia Frontier Capital, just a brief background, has been invested in Sri Lanka since 2013-14. So I've been visiting the country every year, pretty much every year, except during the pandemic. So we've seen kind of the ups and downs that the country's gone through, say, over the last decade or so, especially in the last 5 or 6 years. There's been the recovery. I would say from all the markets that we invest in as of now, I think Sri Lanka would really be out there in terms of a top pick in terms of the countries. It's our second biggest weight in the fund. And we've increased it over the last few years because of, as you mentioned, as you must have heard the other speakers mention, you've seen a recovery in the last few years, a very strong recovery across the board in many parts of the economy. And we've seen it ourselves. So I've been on the ground in Sri Lanka. I was there in 2022 when the crisis, just after the crisis. I was there the last few years as well. And we've seen incremental benefits, incremental positives happen in the last few years. IMF program, inflation coming down, tourism coming back. You know, GDP growth has been well ahead of expectations. Last year, GDP growth was 5%. The IMF was expecting about 3%. In the first quarter of this year, it's 4.8%. So all the indicators have been quite positive for the country. So that's been one of the driving factors for us to increase allocation to Sri Lanka. But besides that, I think just valuations were very attractive in the last few years because of what happened from a macro and political perspective. You had extremely, bottom of the valuation for many companies because of a lot of the negatives were already discounted quite heavily. And as the positives came through, you saw a pretty big re-rating in the stock market and across these many of these companies that we hold. So that's some of the important factors what drove us to Sri Lanka. But if you just take a more big picture view on the country, the last few years have been it's not been 1 or 2 tough years of Sri Lanka, it's been 5 or 6 tough years. So starting from end of 2018, there had a constitutional crisis, 2019, Easter Sunday attacks, 2020-21 was the pandemic, 2022 was the political crisis and economic crisis. So if you ask me honestly, even though the stock market has done very well for the last 2.5 odd years, the recovery is only begun now, because for the last 5 years, the country didn't have a chance to really recover. It's always one issue after the other, some problem happening every year. So even though there's been decent economic growth for the last 12 months, 2025 will be the first year of a full economic recovery with political stability and economic stability. So if you take a more longer term view, I think the next 3-4 years should be pretty good for Sri Lanka. The platform has been set for pretty stable growth. So my view is that I would expect the momentum to continue as an investor in the economy as well.
Which is the sectors that you consider key to invest as an external investor like me?
Yeah, I mean, firstly, the stock market in Sri Lanka is not very big, not like India or China or Thailand, Indonesia. So you have selective names you can look at across many sectors, which are blue chip companies. But just to give you a brief kind of backdrop as to how it played out. So for example, when the crisis just broke out in 2022 or beginning of 2023, like I said, valuations were very attractive. But the first sectors to kind of come out of the crisis or to do well were the banking stocks or banking sectors. And those ones, because of their exposure to sovereign debt and domestic debt, with those issues getting resolved, those kind of sectors were first to kind of come out of the crisis. And as the economy started recovering, you saw loan growth recover. And I think the banking sector in general has still some way to run because, as the governor mentioned, you're seeing loan growth across the board now. So that looks pretty interesting. But besides that, on a consumption level as well, if you look at the absolute, even the economy on an absolute basis is still below pre-pandemic levels. So it still has some way to come back. So if Sri Lanka does 4.5% GDP growth in the next 2, 3 or 4 years, you're going to see domestic consumption come back in a pretty strong way, which was quite subdued for the last few years. So I think many companies in the consumption-focused sectors could be, food and beverage, consumer discretionary, healthcare. Those look quite interesting from a listed equity perspective at this point in time.
There is a lot of fund managers here and a lot of banks. So then, for example, if we like to invest in Sri Lanka, which is the challenge that we can find from your point of view?
For other investors to invest in Sri Lanka?
Yeah.
Well, there's no ETF. So you have to go through active investor like ASF Capital or some of the other fund managers over here who are experts on Sri Lanka. So I think, the active management is the best way to go about investing, not just in Sri Lanka, but I would say in emerging and frontier markets, because ETFs don't really offer great returns. They're very index focused. But active managers focus on companies, focus on stock selection, and I think that's the way to get exposure to Sri Lanka at this point in time.
Well, thank you. I think we have Naveen, that this is a local fund manager. So then you can give us maybe your perspective and your perspective about how the market is looking from the insider.
Thank you very much, and thank you to the Stock Exchange and the SEC for inviting me. If you look at how domestic investors are looking at the market right now, it is important to understand the macro environment going forward. Actually, I have a couple of slides, if I could put it on. The key thing here is that, over the last couple of years, and the governor alluded to this as well, and actually the governor has used some of the slides that I'm using as well, but I do have some forecasts in there, is that Sri Lanka has gone through a couple of structural reforms which are going to make the macro environment very different to what we've seen, certainly since, for example, 2008 or 2009. If you look at this particular chart, as a country, since the end of the war, we have been running very large primary deficits. So government income has not been enough to cover government expenditure. Now with the Public Finance Management Act and the government's commitment to running a primary surplus, what this means is that we should be able to see a lot more stable interest rates in the future. If you look at the past, we've seen very strong interest rate cycles. Even if you exclude what happened during the crisis, if you look at 2011 to 2012, if you look at 2015 to 2016, you've seen interest rates moving up by 500, 600 basis points simply because of the government running large primary deficits and using the central bank as a money printer. So I think what's going to happen in the future is that we will see a lot more stable interest rates. And that has huge implications as a domestic manager in terms of asset allocation decisions. When you can get 15, 16% on fixed income, it doesn't necessarily make sense to invest in equities. But going forward, we are probably going to look at mid-single digit after-tax fixed income returns, which is going to make equities a lot more exciting. So the government's target is 2.3% fiscal primary surplus for this year, and I think we should be able to hit it. We've already done about 849 billion for the first 6 months, which is above the 750 million target. If I look at inflation, we've had a period of very high inflation. Naturally, when you have periods of very high inflation, you do have periods of deflation. But when you've had inflation to the tune of 70%, one of the things that we saw in the economy, particularly in the consumer sector that Ruchir alluded to, we saw about 30 to 40% volume contraction. We are now beginning to see that volumes coming back. And high inflation also means that as an equity investor, the absolute profitability in nominal terms is actually much higher now for corporates than they were pre-crisis. So I think inflation is going to be very much under control as well. So with that in mind, we think that interest rates are going to be relatively low. It's still 8 to 9%, which may sound a lot if you're sitting in Singapore, but certainly for us in Sri Lanka, 8 to 9% is too low, which basically means that your long-term fund managers, your insurance companies, your pension funds, which were nicely enjoying those 13, 14% fixed income returns, now are looking at
potentially after-tax returns of about 5-6%. So they will be forced to increase their equity allocations. So I would expect to see a much larger allocation shift towards equities coming from domestic fund managers. We are already seeing that we manage a lot of ultra-high net worth money, and we are seeing a lot more of asset allocation changes to equities coming from that side. The other thing is that, historically we've run very large current account deficits. We've had current account surpluses from about 2022 onwards, but the surpluses that we saw in 23 and 24 were artificial because we had import controls. But right now we have a current account surplus, which I think it's real because import controls have been taken off. And we think that the country will continue to see a current account surplus this year as well. So if we can manage with a positive or even a marginally negative current account surplus, we are going to look at a period where we'll have a stable currency. So provided that we stick to the reforms that were done, provided that Professor Anil Jayant and the team sticks to that fiscal discipline, provided that we keep the central bank act in place, Sri Lanka is going to see a period of relatively stable interest rates, relatively stable exchange rates. We have not seen that in the past. Whatever stable periods we've seen in the past has been artificially managed. So with that in mind, I think what's going to happen is you're going to see a lot more domestic flows into equities as well. So that's from an asset allocation point of view. Then from a market point of view, yes, the market has gone up quite a bit. But if you look at our coverage unions, we cover about 60 listed companies, active companies that we track. We are, as a company, Linear, we are the largest private investor in the equity markets in the country. We think there's potentially about 20 to 25% earnings growth left in the market. And this is going to come from volume recovery and also operational leverage kicking in as well. So even though the market has run up, we still think that on a forward basis, the market is still attractive. Construction sector is at about 6 to 7 times forward earnings. The two large banks are still at 0.8 to 0.85 forward book. And so I still think that there is a fundamental basis for equity markets to re-rate as well. So there's an asset allocation change coming from low fixed income rates on the domestic side and into a market which I think it's still structurally undervalued.
Well, I was very impressed by the video, and then when I see how the market has run up, it's like impressive, no? But there is two, also what I see from the point of view of the investors. I have some clients that are from Sri Lanka and they just want to be focused in the deposit. Then you mentioned that equity is a good opportunity, but then how this investor could have access? I think, what is the other products that the domestic investor can have in order to invest?
Right. So Sri Lanka, if I just talk a little bit about the investment landscape in Sri Lanka, as a fund manager, we only have two asset classes, equities and fixed income. We don't have REITs, so real estate is not really an asset class. Sri Lanka has had mutual funds since about the 1990s. But over the last couple of years, we've seen a resurgence in that industry. I think there's about 15 or 16 fund management companies in the country, collectively managing about $2 billion worth of assets. Mind you, most of that is in fixed income. So for a lot of, particularly Sri Lankan expats, one thing that a lot of Sri Lankan expats don't know is that most of them have money in Sri Lanka, which they can't take out because of capital controls. And 9 times out of 10, that money is in the bank. And when you are in an environment where your bank is going to give you about 7% pre-tax, I think it's a little bit silly to keep your money in the bank. So the mutual funds in Sri Lanka are permitted investments for any Sri Lankan expat who has money in the so-called blocked accounts. You have everything from money market funds to long-term fixed income funds to treasury funds to equity funds. And investing into mutual funds in Sri Lanka is relatively straightforward. There is an association, you can get the list of names, you can pick the fund that you would like. I can give you a very biased opinion of a fund, but you can pick the fund that you would like. Pretty much all of them will have some form of digital onboarding. You can get yourself onboarded within a day. And then if you already have money in Sri Lanka, it's a very simple investment opportunity. And I don't think going forward it makes sense for any Sri Lankan expats to keep money in a bank. The banks are not going to like to hear me say that. But I would strongly suggest that they look at the mutual fund industry, which is called the unit trust in Sri Lanka.
Well, there has been touched the subject about the IMF program from the government. The governor of the central bank were touching the subject. What do you think that this is what's your opinion on this and how this can affect the market?
So I think, I think there was a lot of concern when the new government came into place. I myself had some concerns whether the government will stick to the program. And I have to say I've been proved wrong. There is commitment, there appears to be commitment from the government to stick to the program. And, the challenge is not going to be now. We don't really have much of a choice. We have to stick to the program. I think the real challenge to the government would be in a couple of years' time when we have buffers. When we have a lot of buffers, that is when the temptation comes in to loosen a little bit. And I sincerely hope at that time that the government still continues to stick to the program. Because if we can stick to the current trajectory beyond the IMF program as well, stick to fiscal discipline, stick to the Central Bank Act, stick to inflation target management, then if you can do that for 5 years, you'll be looking at a very different country. And I sincerely hope that the government will continue to do that. I mean, they're doing a great job now, and I really hope that they continue with that. Thank you.
Well, then Mr. Rai Abhiwardena, this is the CSS. So there is a lot of products that they have been created by the Commission. So then I would like you to elaborate a little bit more about the product and then also how you take ESG into this consideration.
Thank you, Anna. So we have introduced a range of new, on the debt side, we have now green and blue bonds. We have sukuks, that's covering the Islamic banking frontier. We have perpetual bonds. We have infrastructure bonds. So we have introduced a range of new debt instruments into the market. And as Naveen said, we are strictly a two-tier asset class. So on the equity side, we have stock borrowing and lending. We have SBL, but I haven't seen that being utilized to that effect of India. Am I right? Yeah. But we are seeing a lot of investments, a lot of impetus now into debt instruments, and we see a lot of growth in that area. On ESG, yes. So the blue and the green bonds, and we're also now following the GRI. That is GRI reporting, global reporting initiatives for annual reports, so that we are aligned more, and there's more awareness and there's more reporting in annual reports on GST related governance and in the impact that it is having, that companies have in following ESG principles. So broadly, there's been a surge, I would say, latterly, maybe over the last year or so, in embracing ESG-related doctrines.
So would you say that there is more appetite for the ESG products?
Yes, most certainly, because we know that the large funds globally that invest in ESG-related instruments. And we ourselves, we had the first one was the DFCC bond, which got a dual listing. It got listed in Luxembourg and then had a secondary listing on the GIFT City in Gujarat as well. So we can see that even from a global investor appetite in terms of recognition, acceptance, that the bonds are gaining momentum and gathering traction, even from a regional and global perspective.
So then, from the point of view of the liquidity used to be an issue because it's linked to these bonds, etc. How do you see this moving forward? How do you see the improvement of liquidity in the medium term?
So we've seen, as a result of the surge in the market, as I alluded to in my opening remarks this morning, we saw the index, which was like at 13,000 in November of last year. It's surged now over the last 8 months. It's at 19,900 points, and market capitalization has increased from the 16.4 billion to 23.5 billion. And so we see a lot of wealth being created. And as all the speakers spoke subsequently, and even Navin now, we see more value. We see that there is more potential, that there would be more value created going forward as well. And in terms of increasing liquidity, we need more listings. And I think that's one area where the Stock Exchange and the Securities and Exchange Commission both are conducting regular seminars. They are approaching the unlisted companies and sort of communicating to them and conveying the benefits of being listed. So one area is to get the private entities that are not listed, the unlisted, to come into the market. The other is, of course, SOE. And since the Honorable Minister is also here with us today, and I think he broadly spoke about bundling certain sectors. So I think there's a huge potential, and they don't need to list state enterprises, don't need to list large quantities. But I think even if you put out a 10% into the market, the resounding market capitalization increase is phenomenal. And I think a few such listings would really snowball or really increase market capitalization hugely. So those are a few areas where I think which are the first would be the increasing listings, particularly at a time where the ratios are good. So there's value also for private non-listed entities to seek a listing in this environment. And as again Navin said, we didn't see much of listings because there wasn't much of a movement in the market over the last maybe 4 or 5 years. 18 we had the lockdown. 18 we had an issue with the change in the government momentarily. 19 we had the Easter bombing, and 2021 we had the COVID, the endemic. So we've had setbacks as well. In 2022 we went through an economic crisis. So it's now that we are really coming out of the woods and seeing a lot of potential. So I'm confident that there would be more companies seeking listings, and of course the icing would be to get a couple of SOEs listed as well along the way.
So from the point of view of the infrastructure, that this is basically all the things that you are doing now, you have improved a lot, but what is the improvement that you see moving forward from the market infrastructure point of view?
Equity or debt?
Yeah.
Infrastructure, is it? Yeah, so we recently introduced the CCP. Week before last, we formally launched it. And I think that's a huge impetus because we did not have a secure settlement. Although we've never had a settlement failure, there's always the risk. And I think now that risk is being nullified by the introduction of the CCP. We also introduced DVP before that. So CCP would now pave the way for us to bring in new products like futures and do a lot more. And from a foreign investor's perspective, it takes away completely, it annuls the risk of settlement failure. So I think that's a huge upside. And the stock exchange and the SEC, with the fuller support of the SEC, we were able to launch it, and it became a reality 2 weeks ago. So we see those two as key criteria. We also, as I said, we need to see whether we could get stock borrowing and lending, because we don't have short selling in our market. And that too might be a new product that we could introduce, which would then bring a further balance in terms of demand and supply.
It's very, very interesting, I think, from the point of view of a foreigner investor.
Thank you.
Then I would like to go with the professor, and then I would like to link the question that they were talking about the settlement. Then we start for the settlement, because basically, professor, I think the settlement, they have changed from T4 to D2, so then maybe the target is D1. So how you are gonna get there?
Yes, gradually Sri Lanka also must move towards T+1. So that should be the next target. But now, from T+3 to T+2, we have done and we are there. And next target is that now we are moving towards that. But for that, there are two challenges to be addressed. One is the operational challenges. The other one is the structural challenges. So operationally, I think the custodians, bankers and banks and the brokers, we have to link with the system. So we have to operationalize certain things. And at the Colombo Stock Exchange level, we have to do certain fine tuning. So then technologically, we can further think about now, as Mr. Ray mentioned. So with the CCP implementation, I think things will be smoother. And with all these requirements now, structurally, we have to fulfill certain requirements. So I think Colombo Stock Exchange and CSE, we are talking about, we have, discussions on this matter. But I don't think it will be a quick thing, but will take some time. Yeah.
Well, this is good that it's at least in the agenda.
Yeah, we are in the process of thinking, and we are working towards it.
Another question that I have, that this is probably very difficult for you, is because you need to drive in between the regulation to be strict, like in Singapore, the MAS, and also to develop the market, to allow the stock exchange to develop. How do you manage, and then how do you wiggle in between the two? As an appendix. Yeah.
Okay. Yes. Actually, it's a very good question. Regulators are basically very rigid, right? And we were very rigid during the last several years. Now our approach, we have changed our basic approach. Rather than just only regulating, we are facilitating. That's why we are working very closely, work in harmony with almost all the stakeholders. Not only the SRO, the operator, but we are working very closely with the brokers, intermediaries, and that's why we are here even today. So even in the past we have done certain things, but we try to facilitate the market development. So we need to regulate. So we are doing it. We have been doing it, and we are in the, we are doing it, and we will be doing the regulation part. But I think for you to regulate, you have to have a very good market. So market development is our key, and we are, for that, we strike a balance between market development and regulation. So very recently, 6 months ago, we formulated a mechanism. So we call it 12 key transformative projects. So now most of the projects are joint projects, not only SEC. So we are with almost all the stakeholders, and with those, one is digitalization of Colombo Stock Exchange. The second one is we are thinking on the development of the corporate bond markets, then digitalization of the Sri Lankan market, then we have new products development and the like, so new listings. So new listing is one of the major concerns, and under that we thought of, since Minister also with us, I think I must say on this, specifically SOE, Ray just mentioned about it. Now SOE, targeting the SOE, we have done so many things, and our infrastructure is there, and our catalyst board is ready, that is dedicated for SOE listing. I think almost all the requirements are fulfilled. Now only thing is government to get ready for the battle and think about listing. Actually, we are in the process of discussing this matter, and being the regulator and the facilitator, I think I had so many rounds of discussion. Even today morning I had a very serious chat with the minister as well. So they are now, earlier what happened was Sri Lankan politicians and the policymakers were afraid to openly say whether they are going to list or bring SOEs towards the capital market. So capital formation through the capital market. So they thought that it's basically privatization. Now luckily, thank God, so this government particularly understood the importance of capital formation through the capital market. So that is number one, and even the president openly mentioned that SOEs must, come through a holding company and listed. So that is one of the ways, and considering our borrowing capabilities, at the moment there's no other option. So if you really want to have a vibrant plans with the SOEs, they must come to the Sri Lankan capital market and formulate capital. So I always criticize and challenge the government. I say, now, Cinnamon Life, one of the major projects of John Keels. So I'm not promoting John Keels, but just, giving you an example. So they launched this Cinnamon Life, that is one of the largest private sector investment, 2.8 billion US dollars, right? 1.4 billion US dollars. It is half of 2.8 IMF bailout. So see the size. If a company in Sri Lanka can do this wonder, why the government can't do that? So they know it, right? Definitely this government will support the SOEs, and SOEs must revive, and they can do wonders, definitely, right? For that, the only thing is, even in the morning, I think it's a mistake, we must not think about borrowing, right? We must stop talking about, must reduce the volume of the borrowed money. So we must think about our potential of Sri Lankan capital market. So good example is Cinnamon Life. So this 1.4 billion, out of that, majority is through the Sri Lankan capital market. So John Keels will, explain it further. So that's why I am asking, this market has the potential, and we have a good, surrounding. Never in the past, we didn't have this, atmosphere in the past, because, if you take the political stability. So when you get the political stability, then the market sentiments were not there, right? So now the macroeconomic variables are very sound, and the country's economy and the government policymakers' mindset is there. I think almost all the components are satisfied, requirements are satisfied. Now this must be the playground is ready. Now we have to play the match. So therefore, I think we must facilitate, as the regulator, we must facilitate market development while regulating. So it's a difficult game, but we are doing that. Thank you.
I can see. I have another question for you. I think we were talking, the minister was talking about the energy, and they were talking about the rare materials that you have, that this is linked to commodities and the things that you have mentioned. There is some step that the CIC is taking about the establish commodities and derivative markets. I want to see a little bit more what your thoughts about, because I did not know till a few months ago. So what's the future of this thing? How they are planning to do?
Yes, now we have already called the RFPs, and we have received international proposals. Now we are in the process of evaluating them. So if I take little bit time, now in Sri Lanka we don't have derivative in a formal way, but we have for vegetable, then for some items like the tea, spices, they have people, they have derivative arrangements, right, contracts. But in a formal way, we don't have a commodities market. So, and you all know, basically Sri Lanka, sometimes we face rice issue, right? Sometimes there are, it's a government level, it's a national crisis sometimes. So I think, if we can have a derivative commodities exchange, so number one thing will be rice, then gold, tea, and spices. So we can consider, and we have done, some practitioners together with academics, they had conducted several studies, and now we found there's a feasibility. So that's why, based on those studies and all, we decided to have this multi-asset derivative exchange, including commodities. So, and that will be there, and even we are closely working with the Trade Ministry. So I think we very recently conducted a forum in Colombo. It was overwhelming response. With them, I think we will be able to have this, because they have a very good warehouse system and their willingness to do this. So I think with the finalized the vendor and the strategic investor, we will be able to have this, but it will take some time. Almost all the regulatory aspects are covered.
Well, thank you for all your insights. It's a very insightful answer. So then we can go to the questions for the public.
Before that, can I have a small
yes,
request?
For sure.
Since the minister is here, so I think he can speak a few words about SOE listing and how SOEs are going to be in the market. So if the minister
I would love
talk about these few minutes, so that would be beneficial to the entire. Thank you for accommodating.
Yes.
I'll just give a quick update. The bill has been already drafted, that is with the Attorney General's Department. So the basic structure is, initially we form a holding company with the ownership of the Treasury, within which first identified SOEs, not all, there are so many SOEs. The commercial nature SOEs are going to be brought under one umbrella. The administration, the governance will be done through the boards, and one governing board would be there at the top company. Other companies within the holding company will be governed by the boards. So it has the freedom to look at the market dimensions and take the right decisions with the given legislation, so in detail. So hopefully, as the professor highlighted, those companies are free to go to the market, so the listing would be one of the key avenues of the raising funds to go ahead with the development projects. Thank you.
Thank you, Minister. So, questions. There is someone that are asking if there is similar program to do non-resident Indian programs in Sri Lanka to encourage Sri Lankan expats to take long-term view of investing?
Yeah, so I think so for Sri Lankan expats, there are two things, right? There is perhaps the money that you already have in the country, which you may not be able to take out because of certain capital controls. So as I said earlier, you can invest those in any of the mutual funds that are there in the market. There's about 15 fund management companies, there are equity funds, money market funds, fixed income funds. And as I said earlier, you can get yourself digitally onboarded with any of these fund managers. And what you'll probably find is that some of them will have compliance structures which are probably on par with what you would see over in Singapore. Then you have the money that you have outside of the country that you may want to invest in Sri Lanka. Again, it's a very streamlined process. You have to open up a special investment account called an IA account, which you can do with any of the international banks that are in Sri Lanka, or for that matter, with any of the local banks that are in Sri Lanka. You can send your money in through that structure. Then you can either put that money into mutual funds, or if you want to buy equities directly, that is also possible. You can invest in government securities. So all those investment opportunities are there. And if you do send in money through the IIA system, you can always take that money out as well. So it's a relatively streamlined process. The IIA process that individuals use is identical to the one that institutional investors use to invest in Sri Lanka as well. So it's a well tried and tested method.
Thank you, Naveen. I wanted to ask, because there is not much question from the public, but I'm very interested about the listing. And this is for you, Mr. Rai. I would like to know a little bit better the understanding, how is the time frame that you are going to use to allow new companies listing, and then how you are going to encourage this?
So it's an ongoing process. We conduct seminars. Then the investment banks have one-to-one meetings. And I said now, under the auspices of the SEC and the Stock Exchange, there are joint educative forums where we encourage and tell people, the private business-owned people, the benefits of listing. So it is an ongoing. But what we see now is, as a result of the markets going up, the PE ratios were about 7-8 times. The multiples were maybe about a year ago. So we see with multiples going up, it becomes more attractive for companies also to seek listings. And the excellent news we heard was that there is already a process in motion. And as Senior Professor Chairman just said now, and as the Minister confirmed, that there is a process now to bring in the SOEs under a holding company and then perhaps list the holding company like your Temasak. Yeah.
Thank you. There is another question for Ruchir. They ask, when looking at Sri Lanka versus other frontier markets, what there are the unique challenge aside from liquidity and access that you have encountered?
Yeah, I mean, every market has got different pros and cons. So obviously, I think Sri Lanka's liquidity actually has improved quite significantly compared to where it was, a couple of years ago. I think daily volumes or daily value trade is, on a good day, is almost $30 billion now. Used to be $5 million a couple of years ago. So it's all relative. So in terms of the challenges of trading Sri Lanka or investing in Sri Lanka, I mean, there are a couple of, one is the investing part. So finding good companies is not really a problem. As I mentioned before, there's some very well-run companies across various sectors like banking and consumer sectors. But the other issue, which when I've spoken to other foreign investors who invest in other emerging markets, frontier markets, the key issue is two key issues. One is the liquidity part, which is still not very accessible to many other funds. And the other is, setting up the paperwork involved to set up for foreign investors still, I would say, it's a little bit time consuming compared to some other markets from an operational perspective. So those are some of the challenges that they face, but it's not something which can't be overcome. I think the bigger issue, the bigger picture is whether the investment case is good enough for foreign investor. I think right now the investment case is very strong for Sri Lanka, and therefore Sri Lanka should capitalize on this opportunity. So like I mentioned in my earlier comments, I think the recovery has only just begun now. So next 3 to 4 years should be pretty stable for Sri Lanka from a growth perspective and just from an earnings growth perspective. I think one concern besides the operational part, liquidity and all the other issues, I think just one concern for me as an investor, and I would say for some other foreign investors, is complacency. So you have, you had a very strong recovery now. You have maybe 1 or 2 years of good recovery, good GDP growth. Is there going to be complacency in the policy making or in the system in terms of following through on the reforms, or just resting on your laurels, and therefore you come back into a crisis again? So investors would not like to see that, and therefore I have some slides. I'm not sure whether they can put it up, but coming back to Naveen's point about multiples, which can still expand from here. The market can still do well. Pre-crisis, when I say pre-crisis, pre-2018, the whole market used to be at 14, 15 times. And many of the blue chip banks, price to book ratios of 1.5, 1.6, sometimes even 2. The blue chip consumer companies, 14, 15 times PE ratios. Despite the market almost doubling in the last probably 2.5 years, and many of these stock prices of these companies also doubling or even more, valuations are still well below pre-crisis levels. So the banks, which Naveen also mentioned, still less than 1 times price to book. Even though I'm being a bit fundamental over here or technical, the ROEs, return on equity of these banks, has gone back to 17 to 18%. This is what they used to earn, in 2016 and 17. So you've gone back to pre-crisis fundamentals, but your valuations are still kind of crisis level, or well, not crisis level, but still depressed. And even for the consumer companies, multiples are now in single digits, 7, 8 times. But earnings are coming back, the demand is there. So there's a lot of room for scope for multiples to expand. So as if you have, I don't think investors are looking for Sri Lanka to do 8%, 9% GDP growth. In my view, in my personal view, as an investor, if Sri Lanka can even do 4.5% for the next 3-4 years without any major issue, like we've seen for the last 5 years, automatically our multiples will expand, because investors are looking for stability. And Sri Lanka has the good companies, they've got the growth, and if the growth comes through, your multiples it will expand, because the investors will reward that consistency, which has been missing for the past few years. So that's how we look at it. I think the biggest challenge is not liquidity, operations, it's whether there'll be complacency going forward in the recovery story.
Well, thank you, Richard. There is the last question. I think some of this have been mentioned, but then they wanted to insist in what specific step in the next 12 to 20 months will make this market more investable and relevant. I think maybe you are the person to...
I would think that there would be a culmination of a few factors, and I think as the key is stability. We have political stability now. The economy is on the right trajectory, and as the gentleman just mentioned, we grow around 4.5 to 5% over the next 4 years. So the macroeconomic factors, the political stability, the rupee stabilizing, all those, given that those remain constant and positive, the companies are going to perform, the earnings are going to be, the companies are going to keep growing at a very steady pace, led by the banks and the construction industry and the tourism industry in particular. So I see that alongside the introduction of the CCP and with possibly the listing coming in of the SOE, state-owned enterprises, through a holding co, would add a lot of impetus to the market. And if I am to ask for one listing, I think perhaps an SOE listing would create a huge impetus, and that would again re-rate the market, because in terms of market capitalization, we will increase dramatically. I'd like to ask Naveen also whether he agrees, or whether there is anything else that he would think would be one particular catalyst for the market over the next 12 to 18 months?
I think the catalysts are already there. As I said, if we stick to the current trajectory, effectively you're going to look at a macro environment in Sri Lanka which is going to be very different to what you've seen probably in the last, 30, 40, 50, pick a year, since 1948, I don't know. You're going to see an environment where you're going to have stable interest rates. You're going to see an environment where you're going to have a stable currency, which makes it a lot more appealing to foreign investors. You're going to see the recovery continuing. I agree with Ruchir. If you can grow at about 4 to 4.5%, you're going to see companies showing consistent earnings growth. You're seeing volume recovery in the market. So I think the catalysts are already there, right? So, and if you can do this for the next 5 years, you'll be looking at a completely different country to perhaps what I've seen in my lifetime.
So great investment platform. Naveen, it's a great time to invest, you would say.
Yeah, and again, the valuations, all comes down to valuations as well, right? So you're looking at companies, Ruchir alluded to this as well. You're looking at still there is room for earnings growth. You're looking at depressed multiples. As I said, the large two banks on our numbers are trading at about 0.8 to 0.85 forward earnings. John Keel's Holdings, according to our numbers, is trading at 9.5 times 27 earnings, right? There's no reason why these companies should be trading at these multiples. These, the large banks, commercial pre-crisis was trading at 1.5 to 2x book. John Keel's was trading at about 15 to 20 times book. You have consumer companies which are trading at 9 to 10 times forward earnings. You have construction companies which are trading at 5 to 6 times forward earnings. There's no reason why these companies should be trading at these multiples in a stable macro environment, in a country which is going through a recovery phase, where there is a recovery, where there is volume growth, where there is consumption coming back. It makes absolutely no sense, right? So these multiples have to re-rate.
Well, thank you. This is very, very interesting. Definitely, Sri Lanka is a place to see as a future investment possibility. So I'm going to thank all my panelists to be here with me. A pleasure to share this time with you guys. And then now, I don't know, is the lunch time or...
Thank you. A round of applause, please, for the panel as well as for Anna, who facilitated this so well. Actually, that's my cue. Keep it short. So, look, this essentially concludes I would say, the first part of the day, because many of you have obviously networking opportunities at lunch and then subsequently one-on-one sessions as well. I'd really like to thank, firstly, the Colombo Stock Exchange and the Securities and Exchange Commission of Sri Lanka for making this a reality. I would like to also thank the High Commissioner and the Sri Lankan High Commission in Singapore for supporting the cause, as well as all of the supporting partners. I'm going to put in a plug for the Singapore-Sri Lanka Business Association. Yet again, I see members of the executive committee over there. Please take the opportunity to have a chit-chat with them over a networking lunch. So without further ado, I would like to thank all of the distinguished panelists, presenters, and the moderators as well for giving up their time and their insights. And please keep the dialogue going. I wish you all well. I wish you good investing, please stay on for the lunch, as well as if you haven't already had pre-arranged sessions for one-on-ones, etc. There are loads of people with the lanyards and the tags who are associated with the CSE and the SEC. They can put you in touch with the right people and take this opportunity to make those connections. Thank you once again for gracing this occasion. All the best.